Good evening, everyone. We are about to start. Apologies again for the late start and the difficulties we would have experiencing with the meeting, but we are now in a position to allow more persons to come and benefit from the information the panelists have to share. So let's get the ball rolling. Officially, welcome to day one of how to secure a mortgage with Barbados Public Workers Credit Union. My name is Nicole Hall, and I'm your host and moderator for this evening session. Before we get started, I would like to do some housekeeping matters. Firstly, I would like to remind you guys to keep your mic muted. All right. I hope everyone is hearing me well. If you're hearing me well, raise your hand, give me something, but I hope you guys are hearing me well. Just let me get settled. As I said, my name is Nicole, and I'm your host and moderator for this evening session. I know you guys are all here to find out how to basically become a homeowner. Home ownership is possible for all those who aspire to become homeowners. I'll be real with you. The journey is not an easy one. It can be stressful. I will not sit here and lie to you, but I assure you, if you come prepared, have your essential information, you plan and you plot, home ownership is possible. All right. Our panelists for today would be Nikita, Glenn, and Leigh-Ann. All right. So without further ado, I am going to get the ball rolling because I know we would have started late. And Nikita has a lot of information to impart on you. Okay. Nikita will be touching on basically how to become financially prepared for your mortgage. Things to do before, things to do during the process, and things to do after. For those that are not thinking about basically getting your mortgage as yet, Nikita is going to basically give you some money management skills. Okay, so I'm going to hand over to Nikita. Welcome, Nikita. You can unmute your mic.
Hi, good evening to everyone. One last technical difficulty, I'll just need access to share my screen so we can get started. So just a little bit about myself. I am an actuary by trade, and I have a financial blog on Instagram called my2cents.bb. So you can check that out for some of the information I'm going to share today, but also some additional information for all of your financial literacy needs. And now we're going to get started on the presentation for today. So, as you will know, we're here to talk about home ownership, and my presentation is predominantly just focusing on the financial aspects of home ownership, especially as it relates to financial planning. Like any other step in your life, home ownership is one where we need to plan, we need to know how much it's going to cost us, how much money we have, how much we can afford, what are the payments we need to make to the credit union when we do get the mortgage. What are some of the other expenses that happen with home insurance, right? So we're going to get started with that today. And just so you know, you can always put some questions in the chat, because once I'm finished, we're going to have a question and answer segment. So that way we can just flow through. You can put the questions in the chat so you don't forget what questions you have to ask. And once I'm done, I will take a look at the chat, or the moderator will let me know what questions you do have. So here's what we're going to cover today. Basically, how to financially plan. What about if you're buying a home versus building a home? And we're actually going to go through a practical exercise. And then I'm going to finish off with some useful tips and some resources that I think you need for home ownership. Okay. So first of all, congratulations on deciding to be a homeowner, right? Big steps. How do we financially plan? So for starters, it's one of the largest debts or investments that you are ever going to make in your lifetime. You know, and being financially prepared goes a very long way to tackling this particular venture, right? So let's get started. So these are a few things for you to decide on before getting started with home ownership, right? Will you buy or build? You know, if you buy a home, is it a home that needs renovations, or is it ready to move in? What can you afford? What do you qualify for? And those two things can be vastly different at times as well, right? So keep that in mind. What's your current financial position? So are there any debts that you want to pay off before you're going to home ownership? Is there maybe you want to set up some savings to decide, okay, I want to save towards my legal fees versus getting a loan to cover the legal fees? All those are things that you want to take into consideration in deciding your current financial position. Am I going to choose a draftsman versus an architect? And a lot of people don't understand the difference, but the biggest difference is the cost. A draftsman tends to be a lot cheaper than a qualified architect. And who are the approved quantity surveyors for the Public Workers Credit Union? And that's important because you want to make sure that whatever property you buy or build is valued by a preferred or approved quantity surveyor, okay? So here are a few things, just a few expenses to consider. We have our legal fees, and something that a lot of people sometimes don't know is that you don't only pay your legal fees, you also pay the credit union's legal fees as well. Now, contractors insurance, the quantity surveyor, property valuation. If you're doing construction, you'll need a valuation at each phase. This one is something that we've specially added to the list because I know that tomorrow the credit union will have a QS who will talk about this, but actually having someone look at your plans before you send them into town and country can actually save you in terms of expenses. So let's say you submit your town and country plan and you get approved, but then when you go to get the QS to price it, it's actually above your budget. So why not just kind of schedule that QS before you submit to town and country, right? Barbados Water Authority, you need to set up a new account and you need to pay for a temporary water installation. Little things that people forget, but they're still important. And of course, you setting up a new account with Barbados Light and Power, and there's obviously an installation fee as well, right? So just a couple things. So when you're finished, you've finished, the house is built, or you've completed the buy-in process, there's a few other things that we don't think about in terms of cost. You built a home or you just bought a home from someone else, you might want to have it industrially cleaned before you move in. There's always furniture and expenses, which is something else that you can always get a loan for as well. There's landscaping if you're into that. I'm more of just a grass person, grass and rocks, but everyone each their own. Maintaining the home and contents insurance, home insurance as well. You might want to get a security system. And one of the reasons that I always encourage persons to consider that is just for the obvious in terms of security, but also having security system actually reduces your home insurance. So you need to tell your insurance company that you actually have a home invasion monitoring system of some kind, so that is applied to your home insurance for consideration. So there's always safety equipment. A lot of people don't remember to do this, but you should have a fire extinguisher at home. You should also have smoke detectors. There might be gardening, plumbing, electrical. You might want maid services, maybe once a month or every week. Water tanks. Water tanks are required for homes that are above 1,500 square feet, which means that every once in a while you might want to do a water tank treatment just to ensure that your tanks and your water is still fresh. There is a grease trap cleaning. There is pest control. I live in St. Philip. I definitely need pest control on a 4 to 6 weeks basis. And then there are the termite treatments, which can be every 4 to 5 years. And of course, there's the annual land tax. So there are lots of costs associated post a mortgage that people need to consider with their financial planning as well. So let's take a look at buying a home, right? If you made that decision, it means that you've made some preliminary decisions already. So you're going to, what's your budget? How much are you pre-approved for? How many rooms do you want in your home? What parish do you want to live in? Do you have a realtor? So you've kind of made some decisions. So now you kind of need to decide what money is needed and when you need that money. So before buying, here are a few things. You need the quantity surveyor to value the property. You also need to find out what the legal fees are, yours and the bank's. And you also need to find out the cost of the stamp duty on your mortgage, right? Post buying, again, some of the things that we've already spoken about, and a lot of people tend to forget that. They take a deep breath and say, I finally got in the house, I'm done. no, that's not quite it. No, we need to actually furnish the house, make sure you have appliances and the house is livable for you and your family, right? So building a home. Building a home is actually a lot more involved than buying a home. And there are a lot more expenses associated with building, sorry. So here are some of those obligations that we may not think about. So before building, here are some of the things that we tend to need to consider in terms of our expenses, right? So determine your pre-approved amount. You will go into the credit union, speak to your loan officer. I know we have Leigh-Ann and Glenn on the call, so they'll speak more about that. We also have to write a list. I always encourage people, write a list of what you want in your home. And then you always identify the things that you need, the things you want, and the things that are nice to have, but you can do without. And this comes in really handy when you're trying to reduce your mortgage amount, right? So for example, I really wanted to have a pool. I don't have a pool, and instead I go to the beach. So that was a nice to have, but can't do without. That's a good example there. Something that you need, for example, might be, well, we need a kitchen, you need a living room. A want might be an office or a gym room. So those are, that's how you kind of identify your list, and it helps you to be able to cut back as necessary. Now, get an approximate cost from your contractor of what your wants are and the things that are nice to have but can do without. And the reason being is that once you know how much it costs, you can decide what to remove, what to leave in, etc. So that comes in very handy. Get your architect or engineer to perform a test hole. Now, I know this is something that a lot of people don't consider. And one of the things that I'll encourage is once you buy or you're interested in a piece of land, get a test hole done. It helps to determine how deep the foundation is. And that will definitely help in saving costs. The last thing you want to do as a homeowner when you're going to build is to start digging your foundation and realize that you have to go an additional couple of feet. And foundation is one of the stages that's very expensive when it comes to building a home. So that's definitely good. That's a nice cost to put in there. Find out the cost of the legal fees again, stamp duties. There's a town and country planning approval. There's also contractor's insurance, which you need. You need the town and country building start certificate or letter. And again, you also need the temporary installations, okay? So during the building process, the quantity surveyor report is something that's required at every phase. So let's say, for example, you have 4 or 5 phases in building, and for each phase, before the credit union releases funds, a QS needs to go and evaluate that the money that you've received so far matches the work on site, okay? So that's very important. During the process of the drawdown, you generally only pay the interest on the amount used to date. And then I always say there's always incidentals. You never know what could possibly happen. So it's always good to have a little extra just in case there's any overage in budget. Now, post-building, you need the government and electrical certificate, which confirms that your house is correctly wired, everything's good. For town and country, you need the compliance certificate, which more or less is the point where town and country says everything is complete, everything is good, you're within the regulations as required for building. We also have the post-construction clean, home and contents insurance, furniture and appliances. Now, what we're going to get into now, and I know that that was quite a mouthful, but I'm going to break it down for you and actually give you some figures to think about, okay? So this process can be daunting for anyone, as Nicole would have indicated when we first started, but it is less daunting if you plan and if you can see all of the figures on paper up front, you know what you need when you need it. So what we're going to do is to go through a practical example of what the costs are for a home. In this example, the couple are the Browns. So we have Mr. and Mrs. Brown here, and this is what their numbers look like. They're a married couple. They're both 35 years old. The husband has a gross salary of $6,000, the wife $7,000. They have no kids. They're currently renting at $1,500 per month, including utilities. They both have a car loan. They thought it was really cute to buy matching cars. So everything's the same for them for their car loan. They have $32,000 left to be repaid in 2.5 years. The cars are valued at $45,000 each, and they have a monthly payment from the credit union of $1,159.97. The wife has a credit card debt. You know, she likes to shop online, maybe a little bit of Amazon, some Sephora. So she has credit card debt with a balance of $10,000 and a minimum repayment of $300, and her interest is 22%. They want to buy land and build their home at Barbados $500,000. The wife has $5,000 in savings. The husband has $3,000 in savings, and they have joint savings of $6,000 at the credit union. Okay, so these are some figures. Don't need to memorize these. We're actually going to use these as we go along. So the couple needs to assess their current financial position, and this is where they should start. And this is not something that's required by the credit union. It's actually something that's not required by financial institutions in Barbados, but I always encourage it when you're looking at your financial position. What is your net worth? Your net worth is your assets less your liabilities, okay? Just so you know, a negative net worth means that you are in the red. It means that you have more debt than you do liabilities. And if that is you at this point in time, a mortgage may not be the thing that you want to do, but you obviously go into your loan officer and have that conversation. So from the time you see that your net worth is positive, so it's in the green, then go on in, have a chat with Leigh-Ann, have a chat with Glenn. So here we go. Mrs. Brown's assets, her car, 45, Mr. Brown, 45,000 as well. Their savings amount, in total, their assets are 104,000. Their liabilities, so they only have the 2 cars and they have the credit card debt, well, Mrs. Brown does, and that's 74,000. So their net worth, their joint net worth is $29,519. So they're in the green, they're good. So that's the first step that they did on their own. In the next step, what they did was, what is your disposable income? So the credit union will actually assess your disposable income, determining how much you qualify for. This is a part of the process. So this is what Mr. Brown's expenses look like each month. And in total, he pays out $4,761.23 from his $6,000 per month salary, which means that he only has disposable income of $1,238.77. So as you can see here, we have NIS, PAYE or income tax. We have he and his wife split groceries and rent 50-50. As I would have explained in the numbers, the rent includes utilities. So utilities here is shown as $0. The car loan, we have gas for the car. We've included his cell phone bill. And we've also included two expenses that I know people generally don't include in their expenses. And that's his personal savings and a joint savings. So every month, he sets aside $500 for his personal savings and $400 in the joint savings with the credit union. And savings should be counted as a part of your expense when you're doing your personal financial planning. So the same can be said for Mrs. Brown. Mrs. Brown spends $506.23 each month from her $7,000 per month salary. It means that her disposable income is $1,493.77. Now, what's different between her and her husband is that one, she makes more money, which means that she pays a greater PAYE. It means that she also puts more into savings for both personal and joint. And she also has her credit card. Okay, so what is your total debt service ratio? And in the credit union, they will tend to call this your credit union payment ratio. They will use this debt ratio to assess how much you can afford in a monthly payment in your mortgage. Now, the ratio takes into consideration all your current debts, all your future debts in respect of your gross salary, right? And that ratio should be below 80%. That's your target. Sorry. So here we have for the Browns, their income, $6,000, $7,000, $13,000 in all. And for their debts, we have the 2 cars, the credit card payment. Other expenses are all of their groceries, gas for the car, cell phone bills, all of that is included in the $3,340. We have a mortgage amount, and this mortgage amount is based on the fact that they want to borrow $500,000 from the credit union, and the current rate at the credit union is 4.75% for your mortgage. That equates to a mortgage amount of $2,608.24. So mortgage-related insurance, and we're actually going to go through this in another slide, came to $791. And approximately they will have to set aside $291 a month for their land tax. In total, their debts are $9,651.52. Now that's divided over their gross income to give a 74% ratio. So as we can see, the Browns are actually below that 80% target, which is great. So they definitely can go into the credit union and check out and find out about their mortgage and what they will need to do in that process. So step 4, know what the credit union is offering and determine your pre-approved amount. This is very important, right? Mortgage, they offer mortgages up to 35 years. The mortgage interest rate of 4.75% currently. You must have a minimum of $4,000 in your credit union account. I would say set up a meeting to speak with a loan officer before starting the process with a contractor, QS, or a draftsman. Now, the Browns have confirmed with their loan officer that they're pre-approved for that $500,000 at 4.75% for 30 years, and they can now start planning. And the reason why they're in for 30 years is because generally the mortgages go up to age 65. And if you would recall, they're both 35 years old. So what we're going to do now is identify the costs associated pre the land purchase and pre-mortgage and the timing of some of those costs, okay? Now, the Browns have a list of preferred quantity surveyors from their loan officer, and they're ready to make contact. So what they're looking to do right now, they're interested in making an offer on a property a piece of land, that's 6,000 square feet. And the house that they have in mind, they're thinking 1,800 square feet at the moment. So the QS land valuation in this example is $600. That has to be paid prior to the valuation is done. The engineer or architect soil test is $300 because that's not actually a report. It's more so that you're paying for the excavator to come on the land to dig the hole so that the architect and the QS can actually see, right? The legal fees on the land, and the land is $100,000 out of the 500, is 3,300 approximately. And that's the legal fees for the Browns. The legal fees for the credit union, however, came up to $2,900. Now, the legal fees are generally paid when the process is done. However, the credit union may require you to have those fees on the account prior to the start of this process, is so that they know that the legal fee money is covered. And that's assuming that you're not taking out a loan with them to cover the legal fees. The draftsman cost is $2 per square foot. So that came to $3,600. Most draftsmen usually ask for 50% deposit up front and then 50% at the end when the plans are done. Now, the QS can review those plans prior to Town and Country. On average, that can cost about $600. You have the contractor's project pricing or the contractor's invoice, which should be no cost to you because he's buying for your business. Town and Country plan approval. This amount is normally based on the size of the house that you're building. So for this house being 1,800 square feet, the applicable charge is $300. So for any homes that are up to 999 square feet, it's $100. For anything that's 1,000 up to 1,499 square feet is $200. Anything between 1,500 and 1,999, sorry for that mistake there, 1,999 is $300, and anything above that is $400 for your plan approval with Town and Country. Now, we're going to still take a look at some more numbers, right? So before you finish your land process, Town and Country actually approves the Browns plans. So it means that they can now convert that land and the building into a full mortgage. So the land process isn't quite done yet, and they were able to get their approval. So there are a few more legal fees that would need to be added to the legal fees that the credit union had originally set aside for them for their land purchase. Okay, so these are noted here. And what's important now is the stamp duty on the mortgage is now applicable on the full amount of $500,000. The draftsman is going to need to prepare construction drawings. Now, what are these? Now, construction drawings are basically the details, or I should say the finer details that your contractor actually needs. It goes into a lot greater detail than your plans, the original plans that you would have submitted to Town and Country. So again, those were $2 per square feet. Barbados Water Authority have averaged this at $400. This can vary, just so you know, as well as the contractor's insurance. I've estimated $1,900 for this project, and this needs to be paid before the first drawdown, before you do anything else. As well as you need to ensure that you have the Town and Country Planning Building Start Certificate, which is $150. And all of this is before any funds are dispersed. So just to recap, there are a number of expenses that we've covered so far in this practical example. So before you get the first drawdown, the total expenses are Barbados $25,759.39. Of this amount, $14,309 are legal fees and stamp duties. All the other expenses are the $11,450. So why I separated these here is to remind you that you can pay the $11,450 out of pocket, and then you can always apply for a loan to cover the $14,309 in legal fees. And this is something that is very common with persons coming in for mortgages. Again, great to speak to Leigh-Ann and Glenn on this. So, identifying the cost and timing of payments for during construction. Now you have the QS report. So in this example, I assume that there were 5 construction phases. So for the first 4, you're paying $800 at the end of each phase prior to the next drawdown. For the final phase, the QS report is a little bit more detailed. So sometimes that could be a little higher than the cost of the original 4. So you'll say that for phase 5, the QS report is $1,000. The monthly bridging loan, this varies based on each drawdown amount for each phase, right? So let's say you draw down, your first drawdown amount is $50,000. You might have to do a repayment of $300 a month, but then by the time you do the next drawdown of another $50,000, that amount goes up, right? So that varies. Then we have the Town and Country Planning Certificate of Compliance. This is actually when the house is done, everything is in, you call Town and Country to do a compliance check to make sure that you have your water tanks, if you're above 1,500 square feet, that the property that was built matches the plans, the approved plans that they would have stamped for you. It is to check to make sure that electrical is good, everything is set as per the building requirements in Barbados. Last thing would be the life insurance. So for the life insurance, given that this is a married couple, I said that it would be joint first to die or 2 single policies. Now, joint first to die, as it sounds, is a life insurance policy that pays out when the first person dies. So you and your wife could be the insured lives on this policy. The credit union is the beneficiary. You pay those premiums on a monthly or annual basis, however you set it up with your insurance company. This is something that the credit union also offers, where they offer their members who are coming in from mortgages a package deal that does include home insurance, content insurance, and the life insurance policy, right? So I've estimated this at $500 a month. And again, I say all this needs to be done when you are coming on to the end, you're about to move in, you're kind of preparing yourself. So this is where the bridging loan is converted to the mortgage. So identifying what their new financial position is based on post-building. So everything's in now. One of the things that you need to consider is home insurance, the annual home insurance. And I want people to remember, home insurance actually only covers the brick and mortar structure. Home insurance does not cover the contents. It doesn't cover your fittings either. And that's something that a lot of people don't know. So it'll cover all the walls, all the windows, the doors, etc. It's not going to cover your fixtures, especially if you don't have the standard fixtures. It won't cover that. It won't cover your clothes or your shoes. Ladies, it will not cover our shoes, okay? It will not cover our shoes. So we get content insurance to cover this. Now, I'll give you a little secret about content insurance, all right? You can either buy content insurance as bulk. So you can call up your agent and say, I want $100,000 in content insurance. I think that will cover everything in my house. The TV, the furniture, the appliances, all of our clothes, shoes, jewelry, everything. And they'll quote you for it and you'll pay that amount. Another way that you can do content insurance is actually to submit a full list of all itemized items. Now, I can give you an example because this is something that I do with my insurance carrier, for example. So last year when I was updating my content insurance, I submitted an Excel spreadsheet by room, and each room I had in the fixtures, I had in what furniture was in that room, I had in what personal items were in that room, whether clothes, shoes, jewelry, bicycles, exercise equipment, whatever it was. And for each item, I put the value to replace those items next to it. And I submitted that to my carrier, and my carrier then quoted me on my content insurance. Now, why that's a little bit different than doing a bulk content insurance is that if you itemize and someone comes into your home and they take a specific item, that actually helps the carrier to quickly turn around your claim, right? Because they can identify that this is something that was on your list of contents for your home. This is the value of it, and they'll be able to quickly turn around that claim. Also, for jewelry. So imagine that you're walking the street, you have on your nice necklace, your nice watch, a family heirloom, and you have it on your contents insurance. And someone runs by, snatches it, and a thief runs by and snatches it and just goes. So even though you aren't at home, the content insurance will still cover that piece of jewelry. And that's one of the big differences between having the itemized list versus having a total content insurance coverage. One other thing we need to remember, and I always tell people that, it's easier to maintain than to cure. So make sure you schedule your termite treatments for every 4 to 5 years. And this can be about $2,500 for a termite treatment. And it's very much so, it varies based on the size of the house as well as the company that you use. The grease trap maintenance, I know a lot of people do not think about this. I personally do not wait until there's an overflow, there's a smell of any kind. I have a standing annual appointment with the grease trap man for $125 to clean my grease trap. And that's simply because maintenance is better than having to repair or replace. So keep that in mind when it comes to home ownership, okay? Monthly gardener, approximately $80. If you're like me, have no flowers, no trees, anything at all, it's just grass, it's $80, give or take, right? Now, your annual land tax, and these are some of the rates here for land tax right now. So land tax is 0% if the properties are below 150,000 in value. It's 0.1% if the properties are above 150, but no more than 450,000. It's 0.7% on properties above 450,000 and below 850, and it's 1% for properties that are above 850,000 in value. Now, this is important to know, so you can average how much your land tax may be, and just so you know, the value that you have may not be the value that the Barbados Revenue Authority has. So you kind of want to make sure and just check to see what value they have as well, okay? So, and of course, if the Revenue Authority has a higher value than the last valuation you have, you should submit the current valuation to make sure you have a lower land tax to pay, okay? So here we are now. I know this is a little small, so forgive me. This is now after, this is us putting it all together. So we have Mr. Brown, Mr. and Mrs. Brown's NIS, their PAYE, the new mortgage payment, their utilities, because they weren't paying utilities before, but they're paying them now. They have the 2 car loans, home insurance. Now, the reason why I have home insurance and content insurance in here is I always encourage persons, instead of waiting for when those things are due, you know, for example, home and car insurance are due in December, starting from January of every year, set aside an amount every month towards that payment in December. So that balloon payment doesn't seem so overwhelming, especially at Christmas time, you know? So I always say budget to put that aside from now. So this home insurance here matches the home insurance that I said above, which was $3,000. The content insurance here of $58.34 is basically taking that $500 and splitting it over a 12-month period, right? They have the life insurance, which is now what they need to have, and they have the credit union as their beneficiary. The 2 cars, the car insurance, groceries for the house. I added up some miscellaneous costs because, you know, every once in a while a pipe might crack might be in the pipe or maybe some electrical problem. So you always just set aside just in case. Their cell phone bills, and they're still saving. I want that part to be very, very clear to you. The expenses still include their personal savings and their joint savings. Now, in total, the Browns now spend $12,134.04 each month from their $13,000 per month salaries. Now, this means that their disposable income is now $865.96. But they've paid all their bills, have a roof over their head, they've done their savings, they're covered for insurance, groceries and everything. They have miscellaneous just in case expenses come up. You know, the gardener or maybe Mr. Brown likes to cut the grass himself. Either way, that money is set aside there. And this is where they are now post going to the credit union for their mortgage. Now, here are some useful tips, okay? The first one is a fave of mine, and a lot of people don't know it. And I think that the Barbados Revenue Authority has been advertising this a lot more recently. So for those persons who, well, everyone should be filing their income tax. When you go into Thomas, they actually flashes there as a news reminder to file for your VAT refund. If you have a property that is valued at $400,000 or less, you can get a VAT rebate from the Barbados Revenue Authority. But this is only eligible for first-time homeowners, okay? So the rebate is applied to the maximum value of $200,000 or the property value at a rate of 7%. Therefore, for a $400,000 property, receives a VAT refund of 7% of $200,000. So if your house is valued at $180,000, it'll be 7% on $180,000. If your house is valued at any amount above $200,000, they will use the $200,000, okay? But the point is that if your house is $400,000 or below, the Barbados Revenue Authority does outline all the things you need to provide to them to prove this, etc. And you submit those receipts that you would have had as well. You always keep those building receipts just in case, right? And you could possibly get a refund of up to $14,000, okay? So make sure you select the types of finishes you want for your home. Most contractors price for average fitting. They don't necessarily price for the big long chandelier that you've been dreaming of for your entire childhood. They don't necessarily price for the fancy knobs that you want for your kitchen cupboards or your wardrobes. So make sure that all those little finishes you have actually selected, you actually show them to your contractor, to your architect, so they are aware of what you want so that it's priced in, right? Write out a plan for each room. I did this when I was building my house, and it was the most amazing thing ever. For every room, I detailed bedroom. This is what I wanted to have in there. These were the fixtures. These were the furnishes. Here are the things that I absolutely want, and here are the things that are needs, and these are the things that are nice to have, but we will see what the budget has to say, etc. So this is something that's a very useful tip for anyone who's going into home ownership, whether or not you are buying or building, okay? So some useful resources. Now, I've mentioned the Barbados Revenue Authority a few times, and I've mentioned town and country planning. So we have the Public Workers Credit Union, their website, and they have a lot of information on there, whether or not you want to just do a quick calculation on the mortgage, you know what the mortgage rate is, you might want to play around there and see what that comes out to be. You can take a look at all of their offerings on there. We have the Barbados Town and Country Planning. On their website, you can actually find all those costs that I mentioned earlier, the cost of building start, the cost for the approval for your plans, the cost for the compliance certificate, all of that is actually on their site. So you can see that there. We have the Barbados Revenue Authority for land tax. This is actually their fax link that tells you how to calculate the land tax, as well as the refund, the one for the VAT rebate. This is the link for that as well. And of course, I've included my Instagram page, my2cents.bb. I post a number of financial literacy items on there. There are a number of resources there for persons who want to own a home. So similar tips to what you see here and some things that you need to consider, things that you should consider as a married couple in terms of financial literacy. There's a wealth of information on there, and all the information is free. That's the important thing as well, okay? So I know that that was a mouthful. I know that I also making sure that I leave time for the others. And I open now to any questions. And thank you so very much for having me. And this is my contact information, my email, and my Instagram page. For those persons, and I always get this question, if the slides will be available, they will be shared with Nicole so that she can share with all the persons who would have registered for this webinar. So that's it for me. So I'm open now to questions.
Thank you very much, Nikita. Indeed, it was a mouthful. I know you were a little pressed for time because of our late start. Is anything else you want to put in before we go to the question and answers? Anything you would have missed?
No, I know that it was a mouthful. I was just trying to pack everything in there, and I'm hopeful that the actual practical example really helped to put some numbers in people's minds, because there are a lot of things that we don't ever think about, you know, when it comes to home ownership.
Even like the content insurance.
Yep. So
okay, first let me thank Nikita. Nikita, we have a lot of questions here. As Nikita was stated before, the slides, we're indeed going to share the slides. So once you would have registered for the training, you would receive the slides in your email by tomorrow morning. Additionally, the recording will be shared as well. So you can watch the slides, listen to the recording, and that you would be able to follow in case you would have missed any important information. All right. Nikita, the first question would have been about the slides, as you would have known. So we answered that, okay? I had a question here from before. The person would have sent the question last week as a relation to financial planning for a mortgage. So they wanted to know what's the best age that they can start financial planning. But before you answer that question, I want to let everyone know, if you're interested in answering any of your questions via the mic, just raise your hand and we will unmute your mic and allow you to speak. All right. So Nikita, over to you with regards to the question.
Okay, so financial planning should start from the time you get your first job, honestly. And as you go on, that financial planning evolves. You know, we get our first job, we think we're making money, we realize we aren't making money, we move to our second job. You know, maybe we go and we do a little bit more certifications and, you know, whatever else, we get another job. But financial planning should start from the time you're working. From the time, whether it's that you have a job or you have your own business. And it's never too early, and it's definitely never too late to financially plan.
Okay, thanks, Nikita. I hope that Nikita would have answered that person's question. I have a next question here from Petra. She's asking, would you encourage having a down payment for a mortgage amount? Or if it doesn't really matter. For example, paying $50,000 towards cash towards a mortgage in the sum of $500,000. So what do you say, Nikita?
Okay, so that one is very dependent on the circumstance, but I'll say off the bat, I don't think it's something that's necessary. So for example, right now we are operating in a buyer's market. You know, the land is cheap, houses are cheap, the interest rates are being offered are very, very low, especially compared to if we start looking at interest rates like from 10 years ago, etc. Now is the perfect market. So the truth is that I wouldn't encourage a balloon payment. If you have $50,000 sitting down, I would say invest that more so than pay off your mortgage. And the one thing that COVID has taught us is that we need to plan for the future. So is that 50,000 your entire savings? Is that 50,000 your emergency fund, etc.? Because I would say, given the pandemic, I think we've learned the importance of saving for a rainy day, saving for, just in case something happens. And I always encourage persons when it comes to the emergency fund to save at least 6 months worth of their salary. So if you're saving on 50,000, I was invested. Put it aside. It will come in handy. Maybe you use some of it to buy the furniture or appliances, or maybe it comes in handy, you know, God forbid that you lose your job, you can still maintain your mortgage payments. Also, it could go towards retirement. There's so many more things that you can do with that that may have a higher return in value or return in interest than paying down your mortgage. And just so it's clear, even though you make a balloon payment on your mortgage, it doesn't change your monthly payment unless you actually go in and ask for a mortgage reassessment. So you might make that 50,000 balloon payment, but it isn't automatic that the credit union is going to reduce your monthly payment. It's still expected in the case of the Browns that they pay that $2,600 a month, regardless of that balloon payment. They can go in and speak to Glenn or Leigh-Ann about renegotiating and coming up with a new payment if they like, but I would say that just invest it.
Okay, thanks, Nikita. Before I go ahead to the next question for you, Nikita, I just want to make note that I'm seeing some questions here as it relates to content that we will cover later on in the webinar on Glenn's and Leigh-Ann's side. Okay, so just let you know that we will get to your questions in that segment. All right, Nikita, okay. I'm back over to you. Karen Russell, she said, I noticed you highlighted a couple with above average salaries. What is your advice to single people wanting to own their own home?
Okay, well, what's the name of the
Karen.
viewer?
Karen. Yes,
so
please.
Karen, I'm a single woman with my own home. So to answer your question, my advice is the same. Financially plan. Identify what you can and cannot afford. Identify what is your pre-approved amount with the credit union before you even start to get all these fabulous ideas in your mind about the homes you want, etc. I would always say sit down first, find out the pre-approved amount. Look at and assess your current financial position. Do you have any debts that you can pay off before you look to do home ownership? I always encourage people to pay off short-term debts like credit cards. Pay those off before you go for your mortgage. If you have a car loan and you do want a little bit more funds for your mortgage, pay off the car loan before you go in as well. Those are also things that you can consider. You can also speak to the credit union about consolidation of any of your other loans with your mortgage, but that's very much so dependent on the overall value that you're looking to borrow, what your disposable income is in terms of repayment, etc. So I would say that you follow the same process. Obviously, the income coming into the household is not the same. Obviously, the expenses are not the same either for a single person versus a couple. But the process really and truly is the same process. Numbers are just slightly different.
Okay, thanks, Nikita. We have questions coming in. Next question is, what is your best advice to someone who's over 35 who will have less repayment period? You know, like the younger you are, you 35 years to repay and stuff like that. So what is your advice for a person over 35 years?
So for anyone, no matter which point you are, obviously, the older you are, the higher the mortgage is because you have fewer years to repay that mortgage. Get started sooner rather than later. You don't want to be in your late 40s or early 50s and then only getting, you know, something like 15 years or 18 years to pay a mortgage. It does add additional financial strain in terms of the payments. They will be higher. So I would say get your basically work on your financial health so that you can be ready to take on that mortgage sooner rather than later. The process is still the same, whether or not you are 35, younger or older. It's the same financial planning. Go in, find out how much you will be pre-approved for. If you know you're not ready now to do that house and you're over 35, find out how much would it be in a year or 2 years time if you do need that additional buffer in order to become prepared, so that you have an idea in your mind, okay, so this is what it's going to cost me if I did it now, this is how much it would cost me in another year, this is how much it will cost me in another 2 years. But that doesn't mean that you still can't do that. I actually have a friend who just started her mortgage process and she is 41. And yes, her years are lower, her payment would be higher. But then what you do is that you determine the things that are most important to you at that point in time in your home. You know, you start to cut back. Remember, make that list of what you need, want, and what are the things that are nice to have, but don't need them.
That is very true, Nikita. I have a next question here, but I think it's pretty similar to the previous one. Would you recommend a person at age 41 and single to think about applying for a mortgage, considering the length of time to repay?
Oh, yes. So that same answer applies here. Yes.
Okay.
If a home ownership is what you want, then yes.
I definitely agree there, Nikita. A next question from Orlando. What is the prime age to become a homeowner, and what do you suggest to those who may be now leaving school and entering into their careers and intent on becoming a homeowner?
Okay, that's a lot of questions there, Orlando. So I'll take the first part. I built my home when I was 27, and I don't think that there is a prime age, but most financial institutions, and I'm sure the credit union is the same, you know, 30 years is normally 30 years to repay a mortgage is the amount most financial institutions kind of like. That's like their comfort area. So I would say at least by 35, you should be looking to do that home ownership by then. Given that the credit union gives you up to 35 years, it does give you a little bit more wiggle room, however. But again, that's something you sit down, you have that conversation with your loan officer about that. As it relates to school leavers, I believe that financial literacy is something that's important from school age, and it's something that was missing from even when I was at school. Knowing how to budget, save, financially plan, whether it's for home ownership, for studying, whatever the case may be. And I think that the only advice I can give, and I'll give the advice I give when I'm giving these talks, is that for persons who are now leaving school and now getting into work, you get your first paycheck to splurge. You know, it's the first time you've had that amount of money in your hand or in your pocket at any given time. I remember my first paycheck. I felt like I was winning $1 million, and I bought everything under the sun. And then when it was gone, I was like, well, it's only 2 days later. What happened? So you get our first paycheck to splurge. After that, I encourage all persons who leave school and are now getting into their first job to get health insurance, get life insurance. And that life insurance is cheaper when you're younger versus when you're older. So imagine if you had gotten that insurance when you were 21, 22, going into the workplace, and you can use that insurance now for your home, for your mortgage, right? So these are things that I would encourage: health and life, setting up an emergency fund just in case, that rainy day fund, setting up for a retirement fund, setting up savings. And those are the 5 steps that I will tell anyone who's going from school into work for the first time. It's hard, but building those healthy habits really help in the long run. And they definitely help to build up credit and credibility with the credit union. So imagine if you started with a savings account and an emergency fund account with the credit union when you first started, and you hardly took money out, but you consistently deposited. The credit union is going to be able to see that. They're going to be able to see that you've been able to manage your finances throughout the year. You definitely have more than a $4,000 minimum that's needed to apply for a mortgage. So you're in good standing. So these good habits, it's never too early to instill them. I actually encourage parents to teach their children financial literacy from the time you're giving them lunch money or an allowance or whatever the case may be. Teach them the value of budgeting and saving and setting aside for rainy days.
Okay, Nikita, we have a next question. Alicia is asking, for life insurance, would this be a monthly payment or a lump sum payment?
Life insurance is generally a monthly payment. It's either monthly or annually. There is not a one-time fee. The only one-time insurance that you have is the contractor's insurance that you pay at the start of the process before you start building. You pay that contractor's insurance, you never pay that again. Home insurance, content insurance is something you pay annually, but obviously depending on which insurance carrier. I know some people allow you to make payments over a 3-month period or over a 6-month period, for example. but life insurance is monthly for the rest of your life or for whatever period long that insurance policy is for, because you can get something called term insurance, which might be, you might buy term for 30 years if you're doing a 30-year mortgage, which means you make that premium payment every month for 30 years and it covers your mortgage.
Okay, thanks, Nikita. Just to let persons know that have their hands raised, we would come to you shortly. I'm just going to ask Nikita 2 more questions. And for the persons that have their hands raised, I would allow you guys to unmute your mic and you can ask your questions there. All right, so just bear with us for a couple. Nikita, Autumn here is asking, in your presentation, you would have mentioned contractors insurance. Could you share more information on this?
So what contractors insurance is that it covers the construction phase, you know, anything that happens on site. So let's say the workmen get injured, maybe there's a fire on site at your, maybe there's a fire on site when you do, just pulling it back up there so she can see. Maybe there's a fire on site in your storage room, in your storage container. Maybe there's theft, etc. So contractors insurance covers what are the possibilities of what can happen on site to ensure that there is a replacement of anything that happens, as well as to ensure if there's any personal injuries, that it could also cover that just in case. Again, a one-time cost.
Okay, thanks, Nikita. I'm going to do one more question from the chat box, and then I would open the floor for questions via the mic. All right. I have a question here asking, if I would like to purchase a house with an apartment attached, would the rental income be counted as personal income?
Okay, so that's a great question. Thank you for asking that and putting me on the spot. Yes, the rental income is included in your income when it comes to determining your debt ratio. However, the rental income is not, 100% of it is not applied to that calculation. And it varies for financial institutions. So I'll let Leigh-Ann and Glenn speak on that percentage, but I know that some institutions only use 50% of that rental income to include. So let's say you have you get a salary every month of $4,000 and the rental income is $1,500. They'll only apply your $5,000 plus $750, for example, in calculating if you are suitable to get that mortgage or if your debt ratio is whatever amount. Okay, so just keep that in mind. It's never 100%.
Okay, thanks, Nikita. All right, one last question, I promise.
That's okay.
With regards, this is from Kiana, hope I pronounced the name correctly. With regards to the mortgage process, generally, we as young people have been told having a good credit is an advantage when it comes to the cost of a mortgage. So as a young person, how do I build good credit? Okay,
so this is something that I've actually spoken about on my page earlier this year. And I will say, one of the myths is that good credit is having debt and showing that you pay and that you never default on it. That is one way of showing you have good credit. But I always tell people, you don't need to have debt to show you have good credit. You can actually build a relationship with your credit union, showing that you have the capability to save and to invest. So for example, Public Workers offers a range of saving accounts. They also offer term deposits, right? And they offer, I think that they offer a home savings plan or product. So you can actually open one of those, start putting money in it, and continue doing that over a period of time. And that's without you actually maybe taking on debt from them, but it shows them that you can commit to putting aside money every month. Yes, you can prove you have good credit quality by having, let's say, a car loan or a student loan, for example, or some other, maybe an unsecured loan where you always make your payments on time, in full, no issues. Someone like that would generally not have a problem coming in and speaking to Leigh-Ann or Glenn. But if you also can build up savings, if you can also just simply show that you're committed to your own cause, then that goes a long way as well. So building that credit quality, and I always tell people it's not building credit quality. What you're building is a banking relationship. That's what you're building, right?
All right, thanks, Nikita. We're going to go towards the persons that would have had their hands raised. I'm going to first start with Rosemary. Hi, Rosemary. Do you still have a question that you need answered? You can go ahead.
Hi, good evening.
Good evening.
Hi, good evening. Okay, well, I'm a little older than most persons. I would have done all the things that Nikita would have said. And then, of course, life happens. I'm now at the stage where you would have purchased the land and you would have done all of those things. And you're now ready to build. Currently, my birthday was yesterday.
Happy birthday, first of all.
Thank you. And I've now hit the grand age of 49. So what advice would you have for me?
I would say, Rosemary, that if you have the land already, which is what I'm getting from you, and I'm guessing you don't have a land loan anymore?
No, I don't.
Okay, good. Then start building. Call Glenn tomorrow. Call Leigh-Ann tomorrow. Have a sit down with them. Take in all of your information.
Okay.
I'm sure, especially since you've had the land and you've paid it off already, means you have good credit quality with the credit union, right? You probably have plans already because I know how that goes. And every year you kind of go back and say, you know what, maybe I could change this. So stop changing things now, Rosemary. And take those plans into Leigh-Ann and Glenn tomorrow, right?
Okay.
They're waiting for you, and have a conversation about what would you be approved for, or what was your pre-approved amount, and start that process. It's now March. You have the rest of the year to kind of get things started, and you are ahead of the game because you have land already that you fully own, which means that you have quite a bit of equity, Rosemary.
Okay.
So I guarantee you, I see Leigh-Ann there smiling. She's very happy to hear about you, Rosemary. So give her a call.
I will, no problem.
Okay, good. So
Thanks.
don't mind the age of 49. You are ahead of the game because you have fully paid off land.
Okay.
And land in Barbados is like gold, especially for someone who wants to be a homeowner. So I would say find out what that amount is and start the ball rolling. And I know, and life happens. Life happens for all of us, trust me. So don't ever be overwhelmed for that. One of the first slides that I would have had on the deck was, it's daunting, but if you don't start, if you don't have that conversation, if you don't sit down and plan, if you don't write down all the information and what all the costs are, then you wouldn't ever start. You will always feel, like, oh my God, there's this pressure. Write it all down, go in and talk to them and get started.
Okay, will do. Thank you so much.
You're welcome.
Thanks, Rosemary. It's never too late to start.
Got you covered. I'll see you soon.
No problem.
Tomorrow, Rosemary, tomorrow.
All right, we're going to move ahead to Joylyn. I hope I pronounced your name right. If I haven't, please forgive me. I'm going to allow you to talk. Hi, Miss Innes, you're there?
Yes, I'm here.
You can go ahead with your question.
My question was similar to Rosemary. I'm 48 now, and I have more than average money saved. I do not want to build. I would like to buy a house. That is about $267,000. I've seen several houses between 200 to 267. What do I do?
You call. So Leigh-Ann is going to be busy tomorrow with Rosemary, but you can give Glenn a call.
Okay.
It's as simple as that, because they're going to tell you all the things you need to bring in. You need to bring in, whether it's your job letter, you bring in, a statement of all your accounts, the value of your accounts, whatever you've saved up, any assets you have. And that's particularly good for persons who are over that 40-year threshold. If you have any assets, it's really good to walk with that information to say, well, look, I have land, or, I have equity somewhere else, or I've saved up X amount of money. And that goes a long way. So Jolene, is that correct? Or Joylene?
Joylene.
Joylene, my apologies. Joylene, you will
Yes.
contact Glenn. Rosemary will contact Leigh-Ann. Next up.
Okay, thank you.
So,
thank you, Nikita. We have a Miss Hart here. Miss Hart, do you still want to speak?
Exactly 10 minutes. Hi, no, I don't. The question was answered.
Okay,
awesome.
that is good. No problem.
I see a question in the chat box though. What about from Carol? What about if you have a land loan with a balance and you want to start building? Carol, that's easy. Again, call Leigh-Ann or Glenn. And this is assuming that you have your land loan with the credit union as well, and see what you can do about converting that into or consolidating that into a mortgage. So we're gonna move your land loan for, usually they're up to 15 years, so whatever amount of years you have left, adding that to the cost of building, and let's get you started with that building process. Simple. So you don't have to own the land already. You don't have to pay it off, to call in, to go down and have a chat with them, because you've started paying the land loan, so there's still equity in there. It might not be the full value of the land, but either way, you can actually take the remaining balance and include that into your mortgage. So it will also help you in terms of reducing that land loan portion.
Okay, thanks, Nikita. I am seeing a question here from Sheena. Sheena is asking, is it mandatory to have contractors build your house? I am going to leave that question for Leigh-Ann and Glenn, okay? All right. I have one more question, one more person, sorry, here. Hi, Paulette, do you still want to speak? Hi, Paulette.
I'm sorry, no, I don't want to speak right now.
Oh, you're good.
Okay, awesome.
Yes, thank you.
I saw a question from Edwin. How do I assess my credit rating before approaching any financial institution? If memory serves me right, Edwin, you were a little late in joining, if you're the same person, I think. So in the beginning, I actually talked a little bit about this in terms of how do you assess, what are some of the things that you look at? So one of the things we covered was taking a look at what's your net worth, your assets less your liabilities. We also took a look at what's your disposable income in terms of what's available, after all your monthly bills and all your debts are paid. And then we also took a look at the ratio to your debts versus your gross income. And that's your debts, including the possible mortgage payment. It includes the insurance associated with that mortgage, all of your other monthly expenses, groceries, cell phone bill, etc. In this example, we spoke about car loans. It also includes your land tax, and that ratio should be below 80%. That's your comfort area. Okay, so I hope that answers your question, Edwin. Oh, MSEAL, you asked about the option to deduct from your RRSP to build your first home. That's still applicable. I know that the government no longer allows the tax break on mortgages and tax breaks on our money that goes into RRSP, but you can borrow, I think it's 20% of your RRSP tax-free, i.e. no withholding tax coming out of it when you make that deduction from your RRSP to go towards your first home. It has to be your first home, however. And I don't think that that can be applied to investment into international real estate. I think it has to be applied to real estate here. So, and it has to be a mortgage. When you're talking about investment property for real estate, that's more so a commercial mortgage or a commercial loan that you're looking for, and not a mortgage. And that's something else people should know. Generally, you're only allowed one mortgage as an individual, as a person, whether it's you by yourself or with a spouse or partner, etc. Any properties beyond that are actually commercial, and the rate for borrowing and the amount you can borrow tends to vary after that first property. So that's to answer your question, Seal. Okay, Keisha has a really long question.
Keisha has a very long question, but I am thinking her first part of her question is for you as it relates to the insurance. And then the second part, I am going to let Leigh-Ann and Glenn answer any question and answer segment. Okay, Keisha,
Awesome.
We haven't forgotten you.
So if I already have life insurance, would I also now need to take out term insurance for the length of the mortgage? No, you don't have to, but the life insurance you have has to cover the value of the mortgage. Okay, so if you have life insurance already and it's 500,000 and that's the amount for your mortgage, you can use that same policy and just change the beneficiary over to the credit union. However, if your life insurance is below the amount for the mortgage, you will have to either increase it if you can, or get additional coverage to cover the difference. But I will say to you, depending on what life insurance you have, and if you can afford it, it does make some sense to, if you can afford it, to get a separate life insurance from the credit union for the mortgage.
Okay, thank you very much. I am going to take the time to thank Nikita for your wisdom and the loads of information and the nuggets that you would have imparted on all the participants tonight. All right, for persons that would have joined us late, Nikita, we're going to share Nikita's slides along with the presentation. All right, so no fear, you're going to have that information. All right, thank you very much, Nikita. And Nikita will be here for the rest of the webinar, just in case you have any more questions for her. Correct, Nikita?
Yes, please. I'll stop sharing now, however.
No problem, no problem.
Thank you, everyone.
All right, we're going to go ahead and I'm going to introduce you to Miss Leigh-Ann Narvel. Leigh-Ann will be basically taking you through the steps on what is a mortgage certificate and how do you request one, okay? And in the instance where she is stumped at any time, Glenn will come in to assist her. But Glenn, after Leigh-Ann, Glenn will cover the strategies for getting your mortgage approved, okay? Let me give you a little information about Leigh-Ann. Leigh-Ann has about 5 years experience in the financial industry. Leigh-Ann is one of our members' favorites. She takes the time out to go through your application to a T, whether it be a commercial, whether it be a consumer loan, or whether it be a mortgage. Leigh-Ann is a very good loans officer. All right, I am going to hand you over to Leigh-Ann and we can get the ball rolling here.
Thank you very much for that wonderful introduction, Nicole. Got me blushing. All right, so I'm gonna start at the introductory stage, which is where everybody really should commence. And that is the mortgage certificate or the initial mortgage interview. So what you need in order to attend or get this mortgage certificate or attend the mortgage interview would be proof of income. When I speak about proof of income, I'm speaking about a job letter within the last 3 months and your last 2 months of pay slips. And me personally, just because I like to get a holistic view, I ask persons to walk with any outstanding balances, any debt that they might have, at least the balance and the monthly repayment. Reason I ask for that is because a mortgage is a very extensive level of financing. Ideally, we would want that the individual is just focusing on their mortgage payment. However, as Nikita would have touched on earlier, in those instances where we can't finance everything within the mortgage, we can look at refinancing those outstanding debts to give you a lower monthly repayment and make the overall financing a lot more reasonable. So you can come into any of our branches. You can ask at the front desk to get a mortgage certificate. They are gonna ask you if you have those documents. So please ensure you have a job letter within the last 3 months, your last 2 months of pay slips. So if you're paid monthly, 2 pay slips. If you're paid semi-monthly, could be 4 to 5 pay slips. And if you're paid weekly, on average, about 8 pay slips. And the reason we want to see these pay slips is to get a grand idea as to what your general income is. So weekly person, sometimes the salary can fluctuate. If we have more payslips, we get a more accurate picture of what your average would be. Once you've come to the mortgage interview and you find out what your mortgage qualifying is, having looked at your gross income and your ideal payment, we wouldn't want to surpass anywhere between 35 and 40% of your salary. Once you have established that mortgage qualifying amount, that figure then guides your search for both a house purchase and for construction. So as Nikita would have spoken about, with the construction option, you need to consider that you have to purchase land. And if it is you have the land already, even better, you have the equity there, you're just looking at your mortgage qualifying to actually build the structure. Similarly, with the house purchase, when you have your mortgage qualifying, we then can determine what's the best offer price for you to put forward on a structure that you are looking at, especially in cases where we cannot consolidate all of the debt, or if we're consolidating a portion of the debt, we want to ensure we can account for the purchase price of the property, ideally the legal fees that the credit union's attorneys will charge, and also a portion of the debt, if not all of the debt. So that is more or less all the information you would get at your first and initial interview. Once you've completed your search, you found the house of your dreams, and you're ready to come and partner with Barbados Public Workers Cooperative Credit Union Limited to finance your home, you will need 2 forms of valid government issued ID. So that could be your national ID, that can be your passport, that can be your driver's license. Now, if it is that you happen to only have 1 form of ID, we can accept the birth certificate and that 1 form of ID, but ideally we want 2 forms of valid government issued photo ID. We're also going to need you to submit that job letter within the last 3 months, those last 2 months of pay slips, and a recent utility bill or bank statement. I'm going to note here because it's a question we get often. It has to be a bank statement from another financial institution. You're not able to use your credit union statement. So it can be a utility bill or a bank statement from another financial institution as proof of your address within your name at your current address within the last 3 months. When we're looking at a house purchase, Nikita would have touched on some of these items. We are going to need a letter of sale. That too is valid for 3 months. You need a valuation report to be prepared by a certified valuer who is a member of a reputable association. Just to give you an idea, one would be BIVA, which is the Barbados Estate Agents and Valuers Association. And we also have the RICS, which is the Royal Institution of Chartered Surveyors. So if they're a member of one of those 2 institutions, we can accept the valuation, and the valuations are valid for a 1-year period. That valuation should also be accompanied with a surveyor's plot. And you will also need a life insurance quote, as Nikita mentioned earlier, just to ensure that you can have the life insurance. If you're an individual applicant, you need it for the full amount. And if you're a joint applicant, then ideally we would like the insurance to be split on both individuals' lives. When you're looking at construction, the individual documents are the same: 2 forms of valid government issued ID, your job letter within the last 3 months, your last 2 months of pay slips, a recent utility bill or bank statement, not from the credit union, coming in your name at your current address within the last 3 months. However, you also need to present then your land tax bill, your land tax clearance certificate, and your land tax receipt for the last period. In addition to that, we also want to see, as Nikita mentioned in her presentation as well, there's a water connection supply. We also would like to see that you would be able to acquire the property insurance, and that normally happens later down in the transaction. And of course, you're going to have to get that life insurance once again, along with a quantity surveyors report, which we're going to dive into tomorrow in the second section of the webinar, along with that valuation report on the land. Again, once they're a member of one of those registered companies that I would have just mentioned, either BIVA or RICS, then we can accept the valuation and quantity survey report, and that too is valid for a year period. When it comes to the process, the application process can take, I would say, anywhere between a week to 2 weeks. It all depends on the level of analysis we need to conduct. Of course, it's extensive financing, but I mentioned we want to ensure that not only do we help you in your financial plan, but that we don't put persons in a financially stressful position. So the analysis is very detailed. And once you are approved, then we do invite you to come back for our third interview where you sign and read your commitment letters and you indicate whether you want to use the credit union's attorney or if you're using your own personal attorney. And as it was mentioned earlier, you have to pay the credit union's attorney. However, that attorney, for speed of transaction, can also act on your behalf.
Thank you very much, Leigh-Ann.
You're welcome.
Before we move ahead, I am going to cover both Leigh-Ann and Glenn's questions together that they both can answer and help out each other, okay? So I am now going to hand over to Glenn. Glenn is going to touch on the strategies for getting your mortgage application approved. I know, Glenn, I know Leigh-Ann would have basically stepped a little bit into your topic, but I know there's still much more information that you can impart on our persons here. All right, I'm going to hand over to Glenn. Glenn, it's all fair to give Glenn an introduction because I would have given Leigh-Ann an introduction as well. Glenn, you need to remind me how many years experience you have in the financial industry. I really lost count, but I know that you are a very, very good loans officer. You manage the team at our Belmont Road branch very well. But before I go into Glenn, I can note that Leigh-Ann is at our Broad Street branch, okay? Back to Glenn. Glenn has, how many years you have, Glenn, in the financial industry?
Just
Your
about
grandfather,
14 years.
no? Pardon?
Just about 14 years.
Yes, Glenn has 14 years in the financial industry. He has a very, very extensive knowledge bank, and I'm going to hand over to him that he can impart some of his knowledge on us so that we will know how to make the right moves and make sure we get approved when we come to the Barbados Public Workers Credit Union. Correct, Glenn?
Yes, Nicole. Good night to all. First off, I want to say thank you to Nikita and to Leigh-Ann because you've just made my job so much more easier by doing what you did before. So pretty much based on what Nikita started us off with planning is key. Knowing what expenses you have in terms of savings, from savings to the NAS to the PAYE, what expenses you will probably face, life insurance, property insurance. Those are constants, water bill, light bill, those are constants that you will face. So planning is really key. Knowing what you really want versus what you really need is key in obtaining a mortgage. Now, when you come to us, you can come to us for an initial interview. We can guide you along, sort of tell you, advise you in terms of the stuff that Leigh-Ann would have just advised on to get the quantities affairs report, the estimates, the contractors, costs, visit an architect, that stuff we can guide you on. And then I guess, as you said, for the second interview, we can then more go in depth into your financial analysis, into what you can get versus what you want. No, in knowing what you can get does not mean that you cannot facilitate your entire dream. There are some things, as Nikita mentioned, that you will have to cut off, but we can get you there for sure towards achieving your goals. So as Leigh-Ann would have mentioned, job letter, 2 recent pay slips if you're monthly paid, 8 if you are weekly paid, and 2 if you're semi-monthly. We need your proof of address. We need your income, your proof of income. That would help us to determine what you are going for. Now, the next 2 most important things are evaluation. If you are purchasing a property and if you are constructing a property, we would then need the QS report. That determines what the cost is versus what your contractor says he will build. That gives more of an accurate picture of the realistic price. And you will know from the quantity surveyors report whether or not you are being duped out front, whether or not your dreams are realistic. You would know if you can really get that house that you want and for the price that you want it at. Not saying that there aren't some people are falling below, but there, as Nikita would have mentioned, you should always make room for cost overruns because it's something that can happen. So as Nikita mentioned, what you should probably do before you come into us is, and let's say you own the land or you're about to purchase the land, just ask the vendor if you can do a debt test. Pay a bobcat guy, he will come, he will dig the four corners and then the middle, and it will sort of give a realistic picture of, hey, that foundation is 4 feet deep. And I know you can ask your contractors if you're actually in the process now, they generally consider in their estimates a certain depth. I believe is 4 feet, but I could be corrected. I'll ask tomorrow in tomorrow's webinar. But is a certain depth the contractor is used. So if you go over that, you can see that there will be a lot of cost overruns. Especially, let's say, for example, being that standard depth is 4 feet and you end up at 15 feet. That's thousands of dollars, probably an engineer's report to sort of make sure that you get the right foundation footing so that your house does not have substructure issues in the future, because that would be additional expense to you. The next step after you've gotten the builder's estimate, the QS report, as I said, no, will be our turn to sort of say based on your expenses you cannot obtain. You may have to look at redoing the plan, adjusting, for example, the plan to put in a position of, let's say, phases, something that does not have to, as Nikita mentioned, a want versus a need. So a room that you may not necessarily need, that can go into like a phase 2 type situation, that we can always just focus on the main thing, which is getting in the house and getting your dreams achieved. The next situation after, like Leigh-Ann, you mentioned everything. After we assess your financial situation and we approve you, the next step would be for us to present our contract, our terms of agreement, the conditions under which we are lending you this loan. You come into us, you ask your questions. Stuff in that contract will be situations like whether or not the contract is, a lot of people ask this question, fixed or variable. Most of all the financial institutions out there would have a variable contract. Initially, they would offer a situation of fixed for a period of time. At this stage, the credit union does not offer fixed mortgages. However, our rate generally does not fluctuate up and down on a constant basis. That rate is sort of pegged against the economy and the economy shifting negative or positive, and we react to suit. Our rates are also tied with our savings rates. So whereas the credit union has a pretty good savings rate at this moment, the mortgage rate has to reflect that, or has to tie in with that. So pretty much I was at the stage of the commitment letter. The other things in the commitment letter would be the insurances, the different things that you have to obtain, or just the conditions of the entire loan would be in that contract. Your length of time, your interest rate, whether it's fixed or variable, the amount of the insurance, the monthly payment. In our commitment letter, we generally state the monthly payment. We approximate the monthly payment also for the insurances. So you are well informed of the expenses that you will face for the life of this mortgage. Now, in mentioning those things, as Nikita said, that you have to budget for them, the credit union also we have escrow accounts that we set up, and we set up at the time of approval, where you don't have to necessarily worry about you doing it yourself. We work with all of that, and when you pay monthly, your mortgage payment comes out, your life insurance payment comes out, your property insurance comes out, Also, property taxes too, we can approximate and put into those escrow accounts for you that you will not have to worry. What else have Nikita and Leigh-Ann leave for me to touch base on? There's not much more. Nicole, I think that we can go towards the questions.
That's fine, Glenn, because it will give us more room to answer the load of questions we have. And I want to put it here now. No question. All questions are good questions. There's not a foolish question. So if you have it in your mind, you can either type it or raise your hand and speak on the mic, okay? All right, we're going to start at the top and we're going to come down. In a case whereby we would have missed your question, feel free to send it to the panelists again and we would ensure that we answer it, okay? All right, we're going to start at the top. Lana is asking, I'm interested in a house development through NHC in the West Terrace. How can I go about that? So basically for Lana, let me get Glenn and Leigh-Ann rolling. Lana would need to first find out how much she qualifies for, correct?
Correct. That's the first course of action. Come into your preferred branch, walk with your recent job letter, at least 2 months of pay slips just to get a good average, and let us then determine what your qualifying would be. If you have any outstanding debt, walk with those balances and the monthly repayments so that we can get as accurate a picture of your financial situation.
Okay, can I move on to the next question? You have anything to add on there, Glenn?
Well, I just wanted to say that the next step after, once you get a mortgage certificate, you just take it into NHC and then they do their process and tell you whether or not or align you with a property.
Okay. We have a question from Edwin. A pleasant good evening all. I joined late. My question is, what are the rates? And are the rates 100% financing being offered? I will put that to Glenn. And what's the duration on the mortgage? But the duration on the mortgage is definitely based on the person's age, correct, Glenn?
Yeah, so we do, the maximum tenor is up to 35, but then the duration generally is changed or altered based on the age of the person. Before answering the question, why we say the tenor has to be pegged against the person's age is that we have to consider the fact that at retirement, we lose income. We lose a big chunk of our income. So we generally structure the tenors to be around retirement age, so that by that age, you do not have that big mortgage expense to face on. Could you repeat the question, Nicole?
The first part of Emmy's question was basically what are our rates and if he can obtain 100% mortgage with us.
Right. Our rates are 4.75%. The question as to whether or not he can obtain 100% financing, that's all dependent on his current situation. So I would suggest at this stage that he probably contact a loans officer tomorrow and explain and have a discussion with them, and they will explain to him whether or not he can find out. We do 100% mortgages, but it's all dependent on certain criteria that he has to follow within.
Thanks, Glenn. I am going to go ahead to the next question. This is from Daniela Haynes. She's asking if she qualifies for $110,000, but the property she's interested in for sale is $160,000. How best does she go about getting this mortgage? Either Glenn or Leigh-Ann can answer, or both.
You can repeat for clarity, please.
All right, she qualifies for $110,000 from what I'm gathering, from what I'm reading, but the property for sale is $160,000. How best does she go about getting this mortgage?
I will start off by stating, I know Nikita mentioned earlier that if you have cash of $50,000, then she could actually inject that. I know Nikita sort of mentioned that, you know, if you use the money to invest, but in this situation where she only qualifies for 110, a cash injection would be one option of obtaining that property. The Another option is generally if it is a situation where there's a partner involved in the situation where she and that partner can co-sign, which then raises the qualifying amount as you bring in two incomes together. But her situation, as I said, the best situation would be to call us tomorrow and we can have a more detailed discussion as to where you can and cannot go and answer your question.
Yes, please. Leigh-Ann, do you have anything to add to Glenn's answer?
What I would add is that remember that when we do the mortgage qualifying, ideally we do not want that your payment surpasses that 35 to 40% range. So if your qualifying is 110, any financing above that amount, even if you were to do a shortfall loan, to me would not be in the person's best financial interest. So I completely agree with Glenn on the part of the individual injecting the savings. That would ultimately be the best way to complete the transaction. And we would need to have surety that you will be able to complete the transaction in full before we can then approve your financing.
Yeah, so don't inject the money up front, please. Just to make sure you qualify for that facility and are approved, because at the end of the day, if we, for some other reason, discover that we cannot facilitate it, you would lose that initial injection.
Yes, please. We have a message here from Kara Phillips. Kara is asking, if I have a land loan with a balance, but I want to start building, how do I go about that? Take the floor, anyone.
Well, similar to what Glenn said, you call us tomorrow. Let us look at what the balance is. Let us compare it to your mortgage qualifying. Let's see if there's any debt that needs to be consolidated, if you're going to be paying for the legal fees out of the mortgage amount, because that ultimately tells you what's the maximum you'll have available in order to construct your property.
Okay. All right, I'm going to go ahead into Keisha Thompson's question. Well, the second part of her question, since Nikita would have answered the first part, she's asking, she's looking to build a home. So she's asking, she'll be using a number of private builders to cut costs and not an official contractor. Would this basically, would she still have to pay contractors insurance? I'm trying to find this out. If the cost only applies to a certified contractor, I can answer part of that question. Basically, the contractor's insurance don't only covers the contractor. It covers basically you building your home. It covers theft, for example, if you are building your home and Oran just delivered your windows and next day somebody come and basically steals them, your windows are covered under the contractor's insurance. Correct, Glenn?
Correct. You're correct.
Yes.
You need to retain your job.
No, please. So contractor's insurance is definitely a must with the mortgage. After the mortgage is completed, then you can basically transfer the contractor's insurance then into your home insurance policy, which you will need to maintain for the mortgage, correct?
Correct.
Okay. All right, let's go on.
Also, before we move on,
ahead,
just because her question just struck something in my memory, she indicated that she was using her personal builder in order to cut costs. So you do need the builder's estimate and the quantity surveyors report, but ultimately the financing is based on the quantity surveyors report. There shouldn't be a significant difference between the builder's estimate and the quantity surveyors report. I advise my customers to both get it, as Glenn would have indicated, both to habitable and to completion when they're asking for that quantity surveyors report.
Okay, thanks, Leigh-Ann. You have anything to add, Glenn?
No, Leigh-Ann captured it all there. That in what Leigh-Ann is asking for in those valuations tells us that where we can and cannot go in terms of shortfalls and different stuff like that. So we are more prepared. The member is more prepared, and we are more prepared should there be a situation that arises where, for example, the debt test wasn't done, there's cost overruns in the foundation, The figures still look good at habitable stage versus a complete stage in terms of the funds. So Leigh-Ann covered it pretty much.
No problem. Before I move to the next question, I just want to remind everyone that if you want to ask a question via the mic, just raise your hand. We will gladly unmute you and allow you to ask your question via the mic, okay? We have a question here from Janice. Janice is asking, if I already own my home, but I want to renovate and extend the house, will a mortgage apply here? You can take that, Glenn.
Yes, a mortgage will apply. You're going to be using your home as the security, so the mortgage will apply.
Okay. I hope you have anything to add there, Leigh-Ann?
No, I agree with Glenn as well.
Okay.
What I would say though is that, is there outstanding balance on your mortgage? Because that is something you would need to consider if you're still currently repaying for that mortgage, or if the mortgage is repaid in full. If it is that we're bringing the balance over from another institution, just bear in mind that you will incur the credit union attorney fees.
Yes. I have a question here. From Leah. My question is, if the land title is in two persons' name, can one person proceed with the mortgage? And if not, what would be the process for the one person to proceed? I am not sure if Glenn and Leigh-Ann might be able to answer this question, but if they do not answer the question in its entirety, sorry about that. We have Susan here tomorrow. She's going to walk you through the legal process. And this question I will put on the sheet to be answered tomorrow. But Glenn and Leigh-Ann, can you guys give us any insight into this question?
One person can go forward in terms of the application of that mortgage to construct or whatever process they want to use it for. But they would need permission from the other person on the title for us to proceed with the legal work. But Susan will clear that up tomorrow for you.
Definitely. We're gonna move on to a next question. I have an offer letter and all the required documents and awaiting the tax clearance certificate. Do I just walk into a loans officer or should I make an appointment? Go, Leigh-Ann, you're smiling that you're ready to go. Sorry, Glenn. Go ahead, Glenn.
At this point, we're still trying to adhere to the protocol. So I would say make an appointment.
Yeah.
That officer may be able to, one, conduct an interview via Skype or Zoom and go through everything with you just to make sure you have the stuff, and then you could either send them by email or mail or drop them off at the front desk, which would keep you from having to wait in a long line and risk yourself being in trouble.
I am going to add to what Glenn has said. You can also make your appointment. You can send us an email on our website. You have the email address for our contact department. You can just drop them an email. You're asking to basically make an interview, make a loan appointment with regards to a mortgage. And sometimes maybe we'll be able to have some part of that interview via the phone. All right, so if you're afraid to come into the branches, we can look at other ways to accommodate you. So don't fear. All right, I'm going to go across the persons that have their hands raised. We're going to start with Miss Smith. Hi, Miss Smith. Are you ready to speak?
Yes, please.
You can go ahead with your question.
Good night.
Can you hear me?
Yes, we can. Loud and clear.
Okay, great. Sorry, you might hear my little 3-year-old. So my husband and I are looking at building. We were looking at some homes, but we couldn't find anything that we liked on the market currently. So we were looking at building either we're really liking the container home idea or the modular home idea, or a combination of a container home with a concrete structure. Can you get a mortgage for something like that that's not really on the market right now, but something kind of new?
Glenn?
Yes, you can. There are some adjustments that we may probably make to the tenor. The rate stands the same at this present moment. We don't interfere with the rate, but the loan tenor would be adjusted slightly depending on the materials that are used, and the insurance is one of the persons you should probably check and have that conversation with is your insurance agency. They would tell you whether or not they can insure the property and to what costs around the insurance, or what requirements you would need to actually obtain the insurances.
Okay, understood. Thank you very much.
You're most welcome. We're going to go ahead and allow Mr. Glenfield Walker to speak. Mr. Walker, do you still have a question you need answered?
Hi, good night. Actually, it's a girl.
Sorry.
It's quite okay.
Okay.
I actually have about 4 questions. I hope that's okay.
Go ahead.
Sure.
If the quantity surveyors report to habitable stage is not the same as the builder's estimate amount, is that an issue? Let me explain. If the quantity surveyors report says that to get the house to habitable, it will take about 200,000, but in retrospect, I can actually get the house built for 120. How does that pose a problem for me? And what would I need to do to make sure that everything is good?
We generally go with the quantity surveyor's estimate. So yes, it would be a problem from that point of view, but however, your loan would be recommended for approval on the quantity surveyor's estimate. If you have completed successfully that house for the $100,000, right? You're free to amortize your loan at that $100,000, or use the difference, for example, for furnishings.
Oh, okay. Well, I need
You're clear on what I explained, right?
Yeah, I understand. But my other question, considering you just said that, will I need to adjust the builder's estimate for the 2 of them to match, or I will not necessarily need to do that? Because from what you explained, it sounds like you would only be doing the mortgage process off of the quantity surveyors report, which is the 300 and something thousand I think I had miscellaneously quoted. Or my builder's estimate can
You
stay
don't
as
necessarily,
is.
one food for thought, though, I want you to consider that I'm not sure your situation here, but generally, if there's a difference between the QS and the contractor, it generally says something that either this property may not be able to be built at the cost that you're getting. So it generally says that if it's a lot more than it says that you probably could get the cost down, or you probably could get another contractor to build that house for you within this budget, right? So if it's saying that it is not possible, we use the figure that is possible, technically speaking, which is the QS report.
Okay, no problem. What is the lifespan of a tax clearance certificate?
Generally, the tax clearance certificates actually have that lifespan listed on them. At the bottom of it, it says this is valid for a month, 2 months, 6 months.
Oh, okay. I haven't received one as yet, so just say we'll ask as we're here. In terms of insurance, in reference to a mortgage, what does a whole life insurance policy mean versus a term life policy in reference to a mortgage application?
I'll take that one if you guys don't mind. So there are generally 3 types of life insurance policies available in Barbados. Whole life being one. As the name suggests, it's coverage for your entire lifetime. So you pay a monthly premium, and that premium covers you for your entire life. So if you die, knock on wood, at age 50, if you die, knock on wood, at age 80, that gives you coverage for that entire period of time. There's also a type of whole life insurance called paid up life, which gives you the same coverage for your entire lifespan, but you stop paying premiums at a certain point. So for example, you can have a paid up to age 65. where you pay premiums until age 65, and then after that, you pay no more premiums, and you're covered for still your entire lifetime. Term insurance, however, is, as the name suggests, insurance for a specified amount of time or term. So you can buy term insurance, for example, for 30 years, or you can buy insurance to a specific age, let's say age 65, and you pay premiums up until that point, and you are covered up until that point, but not thereafter. So when it comes to home ownership, you can use either a term or a whole life policy. I'll tell you that generally the term policies are cheaper than the whole life policies. I'll tell you that much. There's also another type of policy called an endowment policy. And how an endowment policy works is that similarly to whole life and term, you pay the premiums up to a point. For endowments, they normally correspond with your retirement age. So let's say 65. There are a few that are available on the market to age 70. There's some that are early for those persons who may want to retire early to age 55. So if you bought an endowment at age 65, you pay those premiums up until age 65. If you die anytime between now and age 65, the money gets paid to the credit union to pay off your mortgage. But if you live at age 65, you paid off your mortgage with the credit union, and that endowment insurance is actually paid to you. It's a type of life insurance that is paid on death or survivorship. So that one is actually the most expensive type of life insurance, simply because there's a payout at two possible events: death and you surviving, you living, right, to that age or that period. Again, so term life is the cheapest, whole life is the middle guy, endowment is more expensive. And you can use any type of life insurance as your coverage for a mortgage, as long as the sum insured or the face amount, which is basically the amount they pay out on death, covers your mortgage amount. That's what is most important to the credit union, that your mortgage is covered. And that's what's also more important to you, because if you have a family, whether it is a spouse, a partner, you have kids, at least if something happens to you, it means that that mortgage is paid for. Your family doesn't have to worry about that expense, especially when you have a joint mortgage. One person passes away, that payment now falls on the other person. It definitely helps to alleviate that pressure upon the event of your death. So I hope that answers your question.
Also, to add to what Nikita said, the term life policies do not carry a cash surrender value also.
Okay, noted. Okay, well, that means that I made the right choice then, because it's a joint venture between me and one of my siblings. And we made like a rough estimated guess of the amount that we believe it should go to. So basically, he did half, I did half, to add up to the whole amount thing, which I guess is what you were talking about in reference to the joint policies adding together to be more than the actual cost of the house.
So you can do the joint policies, as I would have said in my presentation, or you can do what is called a joint first to die. So whoever is the first person that dies between the two persons, the policy, that's one policy, pays out the death benefit to the credit union as well.
Okay, understood. Yes, interesting question for either Leigh-Ann or Glenn. If I choose to use my own lawyer, would it still be the 4%, I think it is, legal fees that would have to be incurred?
Yes, it would.
Okay. All right. That was my last question. Thank you.
You're welcome.
Thank you very much, and you're welcome. I have Stacy. Well, I have three Stacys here, so I'm going to start with Stacy Motley. Stacy, do you still have a question?
I didn't have a question. I didn't raise my hand, Ms. Nicole.
Okay, but I'm seeing your hand being raised here. No problem. Okay, Stacy Williams. Do you still have a question, Stacy? All right, I am going to move to the last Stacy. Let me see if this Stacy has a question. Hi, Stacy.
Hi, my question was answered. Thank you.
Okay, no problem. All right.
So if I can just add on to Miss Walker's question, her final question about fees. Please also note that those are the only fees incurred in the transaction, which would be the credit union attorney fees.
Okay.
Right. Also to add further, that is one plus of financing with the credit union. The only fees that you incur are the legal costs. We don't have any commitment, signing fees or anything like that. They're just the legal fees towards the purchase of the house. That is it.
I have a question here from Josephine. She said, hopefully it's a she. My apologies if it isn't. I missed some parts. I'm not sure if it would have been mentioned. Is it best to have life insurance policy or term insurance policy before you start the mortgage process? I would give that to Nikita.
Either one works actually. So if you have the policy before you start your mortgage process, it just means that that's one less step for you to do when you're going through the process with Leigh-Ann or Glenn. But if you don't have it, it is one of the steps that will be required before you do the disbursements or before you the sale of the house that you're looking to buy is completed. So it doesn't really matter. And just so you know, term insurance is a type of life insurance and not that they're two different things. So life insurance is just the broad topic, and under that is whole life, term insurance, and endowment insurance, which are offered in Barbados.
Okay. We have some more questions. I know that we would have gone over the time by a lot, but for you guys that are willing to stay, you can, and we would try to answer as much questions as we can. Before persons start to leave, I would like to welcome you all back to part 2, which is tomorrow. We're going to have Sharita Odell. She's going to be here. She's going to give you an overview of the current buyer's market. Like if you're looking to purchase a home that is already built, we're going to have Susan Bayer from our legals department. She's going to dive directly into the entire legal process. I know that persons really fear this part, the legal process. So Susan is going to be here. She's going to give you some information and she's going to answer any of your questions. We are going to also have a quantity surveyor on the panel tomorrow. He's going to look at basically if you're purchasing, building a home. So I know all persons might not look to purchase a home already completed. So he's going to give you some good information as a relation to purchasing a home. And let me just look quickly. Just bear with me 1 second and then we will go to the rest of questions. The other topics for tomorrow, outside of Sharita and Susan, we will look at what to expect within your mortgage interview. So we will help you get prepared for that mortgage interview. I will have Glenn and Leigh-Ann here again tomorrow, and they will go through basically, maybe we will even have a mock interview. Who knows? You have to come tomorrow to see it. All right. Basically that is a snapshot of what you can expect tomorrow. You can always go on our website or visit our social media pages. We will have the entire seminar schedule for tomorrow. All right. So for those who are willing to stay the course with us, and as we look to answer everyone's questions here, I am going to go back to questions. All right. Nikita, just note some of these questions might be for you as well. All right. So please do not leave. All right. I have a message here from Melissa. She's saying, I'm 35 years old and looking to purchase my first home. I would like to purchase it, then renovate in a few years. Would this be possible? Would I obtain a mortgage for the purchase and then another for renovation process? I think we answered this question already. Nikita would have said that you cannot have more than one mortgage, but indeed you can look to, depends on the equity in your home, you can look to basically, some persons call it upstand, or use the equity in your loan to get additional monies to do the renovations. Glenn, Leigh-Ann, or Nikita, you guys can hop in and save me from making myself shame.
You're spot on, Nicole.
Good job. To add to what you said, Nicole, I would recommend to Melissa to consider the cost. And based on this is funding for a mortgage, so the cost of legal fees to interfere with, there's an expense. Everything you have to touch a mortgage or interfere with it to make an, as you mentioned, a stamp or a refinance, there's a legal cost associated with it. And if it is that, she could, before, revise, probably consider what renovation she would like to have done in the initial stages. It may be better for her. Because based on that, based on what the question she's asked, does an existing property which may have equity in it already.
Leigh-Ann or Nikita, you have anything to add?
Nothing on my end.
Okay, I
am inject here and mention our deed of variance, which is a relatively new facility whereby persons who might have outstanding balance or a mortgage with us, depending on the amount that you would have repaid into your mortgage, you can top up your mortgage to the original balance, paying minimal legal fees, and it would just extend the term of the mortgage by the amount that you are requesting. So of course, there's an analysis that has to go into play. You still have to ensure that the mortgage is going to finish by age 65, but that is another option available to you that we've recently added to our product list.
Good. I have, before I go ahead to this question, I have one that I think we can easily address. Andre Alton is asking, can Glenn repeat the interest rates for the mortgage? So currently our interest rate is 4.75, Andre. All right. Janelle Pilgrim, hello. If a couple is about 5 years difference in age, would the repayment plan they receive for the younger partner or the older partner? I think the mortgage is calculated on the younger person, but Glenn, you can correct me.
To be safe, we would analyze the mortgage on the older person. For the simple fact is that one person is going to retire before the other person if everybody lives to that age. And the income, as I mentioned before, will cut. So imagine you're going from a $5,000 income to a $2,500 income, but both of you have budgeted or structured your life to accommodate for, let's say, a $10,000 income in the household. But now that $10,000 is coming down to $7,500, which could have a big impact on the family. So for the best advice, we generally go with the older person. The next situation that we have to consider, which person is the primary applicant in the situation, because there can be some consideration that at that age of retirement is their need to refinance, then the person who's the primary applicant should be able to carry that mortgage for the balance of time in the facility.
Sorry, everyone, I was muted. Thank you very much, Glenn. We have a question here from Shaka O'Neill. He's asking, can you provide more information on how the credit union calculates what a person qualifies for? He knows that it might vary based on the person's expenses and savings and salaries. But what is a rough calculation and how to calculate what you qualify for, so you can be guided accordingly. Rough estimation to have a general range. Who is going to take that question? Glenn, Leigh-Ann, Nikita, someone? Do you need me to repeat the question?
Can you repeat that question for me? Yes.
Okay. Can you, basically Shaka wants to know, how can we determine how much a person qualifies for based on their savings and their salaries? He wants to know basically how is it calculated? And if he can calculate it himself from based on what I am interpreting here.
Okay, so the best way to kind of just get an idea of how much you would qualify for is, first of all, sitting down and writing out all of your expenses. And as small as people like to forget little things like your expenses is not just your debt. So you may have a car loan or a student loan. It's not just those things. It's also groceries, your utilities, you know, all those monthly payments that you make. Write those down on a list. So that's your monthly expenses. Based on that, I would say then use a mortgage calculator using the 4.75% rate. Punch in a few mortgage amounts. So let's say you might start at 200,000, 4.75%. It'll give you what that monthly payment is. Once you have that monthly payment, add that to your list of monthly expenses. And if you total your expenses and you divide that by your gross income, that should be less than or no more than 80%. And that gives you an idea that that 200,000 is actually your maximum amount that you will more than likely qualify for, but you won't know for sure until you go in and speak to the loan officers as well. So if you realize that when you put in that monthly payment at 200,000 and you are still not at 80%, then try to calculate it for 300,000 at 4.75, whatever is the payment amount that you come out with, add that to your list of monthly expenses and do that ratio again, all of your debts divided by your gross income, and see if that is up to 80%. And once you do that, the amount that you actually use for the mortgage calculator will more than likely be your maximum amount that's available for you to borrow. Again, that can be confirmed once you go in and speak to the loan officers, and they're going to ask you for the same information, which is why it's important for you to write down all those monthly expenses at the same time. So in the presentation, not sure if you missed it, I actually did a numerical example for this, and that slide and all the other slides will actually be shared with everyone via email. So you can then take a look at that example to just kind of estimate. And I always tell people, just a little add-on here, Nicole, if you qualify for 500,000, don't take 500,000. That's not sound financial planning. You always leave a little bit of wiggle room just in case something happens, especially if you're getting a mortgage on your own, even whether it's on your own or with a partner. Never take the full amount that you qualify for. It's just good to have that number in your mind for planning purposes, whether it's sitting down with your realtor, whether it is sitting down with your contractor, but don't borrow that full amount.
Thank you very much. Go ahead, Glenn.
Sorry. Just to add to what Nikita is saying, above that 80%, financial institutions generally consider that you are approaching some level of financial strain and may have difficulties in terms of making repayments. So it's good to stay below that. And as Nikita said, do not use the maximum qualifying amount.
All right, I have a follow-up question here from Hyacinth, but before I go to her, I'm seeing some hands raised in the chat. So let me just see if any of these persons want to ask their question via the mic. Hi, Steve. Do you still have a question?
Yes, I still have a question.
Go ahead with your question, Steve.
Okay, so basically, let's say that you have the land already, you have your plan drawn. How do you go about sourcing a contractor or the necessary persons that to take you through that next step, you know, in terms of building and so on? Who would give me advice on that? Thank you.
Okay, so we are not generally in the business of contractors. So I'm not sure I'm the best person to answer that question for you.
I think his question will be more suited for tomorrow. Okay, Steve, so what you can do is you can send me just type out your question to me in the chat and I would add it onto the question list tomorrow. And hopefully you'll be back tomorrow to hear the answer. All right, Steve? We're going to take
just to add, Nicole, for Steve though, if he does find a contractor, he should ask that contractor for references though, to see what houses they've built, to see the quality of work they've done, and he could probably visit the persons that the contractor has done work for before, just so he can have a peace of mind as to the what he's getting involved in.
Okay, thank you very much, Glenn. I'm going to allow Janelle Williams to speak. Janelle, hi, good night. Do you have a question that you still need answered?
Hello, good evening. I am asking whether, oh my goodness, I don't even know why.
Take your time, that's fine.
Hello, can you hear me?
Yes, we can.
Hi, sorry about that. If you have savings that are being held due to a previous loan, can they be applied in any way to the mortgage, or do you have to put in a fresh $4,000 that is not attached to anything as your deposit?
These savings can be utilized provided we are consolidating the debt into the mortgage. So once we are liquidating that debt, these savings will be released. And in that event, it will save you from having to put a fresh $4,000 onto the account.
Okay, thank you so much.
You're welcome.
Glenn, you have anything to add?
No, Leigh-Ann covered it. It all depends on what the person is doing. So consideration can be given. It all depends on how the person has saved over the period of time that they've had their current loan, that we can consider that. So the best thing, if you have a situation like that, come into a branch or call and discuss that with the loans officer.
Okay, I'm going to take some more persons via the mic. Hi, Janelle.
Hi, yes, please.
Hi, you have a question?
Oh, no, I just spoke to you.
Okay, my apologies.
No
Sorry. Maria, sorry about that. I was looking to take Maria. Maria, do you still have a question?
Hi, good evening. Can you hear me?
Yes, please. We can, loud and clear.
Hey, Maria, thank you guys, first of all, for taking the time to answer and provide all this information and stay on and answer all of our questions. My question was, I live overseas. I'm a member that lives overseas, and I want to know what is the process, or if there's anything different that is required from members that live overseas, because I've reached out to other financial institutions, and one indicated I needed a 50% injection, another one said a 20% injection, and I wanted to know what the credit union offers, and then how this process works with the credit union, because I hear you guys keep talking about making an appointment to come in. And as much as I would love to come, you know, that's not going to be as feasible. So just to understand that process, and I'm sure I'm going to be calling Leigh-Ann or Glenn tomorrow, because I do have a pre-approval, but I just wanted to, you know, do my research as to how it works and, you know, just see what my options are.
Hi, Glenn. Do you want to take that question first?
I'll leave that for Leigh-Ann.
All right. So firstly, you can always correspond via email as well. I actually find that my overseas members prefer to correspond via email, where they can digest all the requirements and the information, and then they can always then correspond and message me or call me to find out what else they might have to inquire about. With respect to what the variance is with persons who are residing abroad, one, all documents from abroad need to be notarized by a notary public. So your job letter, your last 2 months of pay slips, your proof of address, your 2 forms of ID. You also need to provide us with a letter, a personal letter that you prepare, indicating that you've given us permission to acquire information from overseas bankers and credit bureaus, along with your notarized report, credit report, the most recent update of your credit report. With respect to the deposit, you need that $4,000 requirement for the savings. You also need 10% of the amount that you are requesting, in addition to 6 months of your monthly repayment in the account in order to make the application.
Okay.
I know that's a mouthful. It's a lot of information to digest, but I would still encourage you to reach out to us tomorrow. You can contact us by our PBX 622-9000, and they can always then transfer you over to me or Glenn, or pass on our email addresses that we can transfer that information to you.
And let me interject here. While sharing Nikita's slide, I would also share Leigh-Ann's and Glenn's direct number, their contact information, inclusive of their email address. All right, so no fear. If you can't get them via telephone, they will definitely be accessible via email. All right.
Yeah.
Thank you.
To add, Nicole, to Maria's question, there's also central bank approval that needs to be granted. So even if we are to be in a position where we can approve that member for financing based on the fact that they're qualified, the Central Bank of Barbados has to grant that individual member permission to borrow.
And then, sorry, I did have another question, because I know Nikita had mentioned something before about having an existing mortgage. And I don't know if, you know, having a mortgage here makes a difference, or if that's also taken into consideration as to getting a mortgage with the credit union.
Okay, so I guess then she called my name. I'm the one in the hot seat. So regardless of where you have that mortgage is going to be a part of your assessment, because you make a monthly payment. It's a monthly expense to you, so it will impact your debt ratio regardless of where that home is. Things do get a little bit more complicated when you are someone who is not based in Barbados and looking to buy a property. I know you mentioned some large percentages there. I know that Glenn also mentioned early on that the credit union does offer 100% financing depending on the specific case. But generally you will find that for persons who are buying property, whether it's a home or building or buying land, and they live overseas, there is usually the mortgage amount is generally lower than for someone who is a resident domiciled in Barbados. So I just want to make that clear to you. And each case will vary. Again, you can email Leigh-Ann and Glenn to really dive into your specific thing. But I can tell you for a fact that once you are not domiciled in Barbados, that percentage that you will get covered for a mortgage is going to be greater than someone who is domiciled in Barbados.
Okay, thank you. It seems evident from the other institutions that I spoke to, so yeah. I appreciate it, thank you.
No problem, you're welcome, Maria.
And I'll be calling Leigh-Ann tomorrow.
No problem. I am going to go ahead to Akeem Lloyd. Akeem, do you have a question you need answered?
Hi, good night. Yes, I do.
Hi, Akeem.
Hi. So if I have a land loan and I have some funds being held for security on this loan, and I want to convert that into a mortgage, or will those funds be released then just to hold the $4,000 for the mortgage?
That would be based on the assessment of the loan. In some cases, yes, it would be released, but as I said, based on your situation and the reason why it was held in the first place, we would have to conduct some analysis and go from there.
Okay, thank you.
It can be released depending on the situation.
Okay, and then you guys would just hold the $4,000, which would be the mortgage security fee.
Well, the qualifying fee. Yes.
Okay, thank you.
All right, thank you, Akeem. I have Kim Holder here. Kim, do you still have a question?
Hello, good night. Yes.
Hi, good night, Kim. Go ahead with your question.
Yes, it's been so informative so far. Just a question, in terms of, well, I have a land mortgage already, but would you advise potential home builders now to actually start construction and see, as we like to say, how far the money was stretched, that you could do like the do the foundation and go up to the walls or maybe ring beam and then come in and get evaluation and then come in for the mortgage, or is that a tricky situation?
I think Nikita has that.
I think that one varies for your situation. Truth is that, again, start the process right. Speak to Leigh-Ann, speak to Glenn, call them, email them, talk about your specific scenario and be advised accordingly. I did mention during the presentation that if you have a lump sum of cash sitting down that you are considering either using as a balloon payment into your mortgage, or you're considering to use, for one of the phases, don't. That's my personal advice. You should apply for the full mortgage from the credit union, and you have that cash there as your security cash, especially if that's all your savings, right? The reality is that a mortgage will generally be stretched over a 30, 35-year period with the credit union, give or take your age. But I would never suggest someone to become illiquid by putting all of their cash into a home or a phase. And then if something happens, but what if you do that at that point in time? You could have applied for the mortgage, the full mortgage from the credit union, and be approved. But you decided to do that for phase one, and let's say phase one and phase two. And then when you get to the final phase, you run out of cash for fittings or fixtures. Then you don't have any more liquid cash, or you don't have any more cash that you can put into the project. You would actually have to go back to the credit union and apply for an upstand. And then there's some legal fees then that are still going to be applicable then for that process. So why do that when you could possibly just wait until the end? If you can qualify for the full amount, get the full amount, go through the entire process. If you get to the end and you do need some additional cash, you are lucky that you have that additional cash saved. You can use that additional cash to invest. You can use that cash for retirement planning. There's so many other areas, like home ownership is not the only stage of your financial planning, is not the only stage of your life. So I will never say to put all of your available cash into doing a phase if you can afford the full mortgage. And especially if you can possibly invest in something that has a greater return than your mortgage, then it really doesn't make any financial sense.
Also, to add, before you start anything, especially because you mentioned that you have a land loan balance, the land is being held as security for the loan, so you need to contact the legal department before you start any work on that land to acquire permission.
Oh, I never considered that. Okay.
Just to add to what Nikita is saying, the adding of cash could be considered if you're trying to target a specific monthly payment. So if you're budgeting in a sense, and you say, well, I know, as Nikita said, if you can or cannot afford it, and if you know, well, I can't afford, for example, a $1,700 monthly payment, but I can afford a $1,500 monthly payment, then you probably could inject to reduce the monthly commitment to the organization based on your based on the knowledge you have of your budget.
Oh, okay. All right. Thank you.
You're welcome. I have a question here from Cherise. She's asking basically for tips for persons that now begin to work but are looking for their mortgage dating. Cherise, Nikita would have covered that earlier in the webinar. We're going to share her slides and recording afterwards, so you can always look out for that information. When you receive that information and it doesn't answer your question, you can always reach out to Glenn, Leigh-Ann, or Nikita, and they would gladly walk you through that process. Okay, I'm seeing a question here from Nicola Herod. Nicola, do you want to answer your question here? Hi, Nicola.
Hi. I wanted to ask, is it that house and land is over 300,000 is 90% financing, and under 300,000 is 95% financing? I just wanted to ask that question.
No problem. Thanks for
Glenn,
your question.
Glenn would have touched on this briefly. It really is dependent on the financial analysis being conducted. It can vary depending on the person's current financial situation and the property that we are analyzing. So 100% financing is an option, but in order to have that information confirmed, it is best to then touch base with a loans officer and conduct the interview where we can see the valuation and see your financial situation from a holistic perspective.
Okay, thank you. The reason I asked that question is that I would have met with Glenn. This was back in 2019, and it was done at 95% financing. But then when it was passed on to the loans officer, then I got a call saying that it would be 90% financing. So that's the reason that I'm asking the question, to get clarity.
All right, for clarity on that situation where you may have given you something and then something changed, based on the time that you would have applied, we may have undergone some policy changes.
Correct.
Right. So that may have affected the, based on the conversation I had with you versus when the loans also actually completely mattered. Okay?
Correct. And it's very easy for—
It was within matter of just weeks, because I think you went on
it can
vacation
happen within
and
weeks.
then the next.
It can happen.
It
It would have happened within, we don't know when the policies actually come out and they take effect. Could be
More or less
a
immediately.
week or two later after we receive the policy.
Yeah.
Yeah.
Okay.
So I can't debate
But
that.
you were
It's not
successful?
impossible for that to take place.
Okay, all right, thank you.
You're welcome.
Okay, were you successful with the facility?
No, not as yet.
Yeah. So
could you
maybe
give me a
if we
call
show,
tomorrow?
yes, please.
Okay, no problem.
All right, no problem.
Nicola, you can direct message Glenn with your contact information and he would reach out to you tomorrow. All right. Thank you very much for your question. Let me go back to the chat. I have a question here. Good evening. Basically, the person wants to know, this is Michael Haynes. He wants to know what are the documents required for a mortgage for a self-employed person. We can start with Glenn and then we can go to Leigh-Ann, because I know self-employed persons with mortgages and even loans on a whole, documentation is a little more than persons that are employed.
Nicole, I'm sorry to interrupt before Glenn and Leigh-Ann go for
You're
it.
welcome.
I'm not answering this question, Glenn. This is definitely all you guys. I'm sorry, but unfortunately I do have another meeting at 9 o'clock.
No problem, Nikita.
Drop off, but you can always send me any questions on the email address I provided, and I'll send the slides to you so you can share with all the attendees. Thanks again for having me, and have a good evening.
Thank you for being here.
Good night,
for all the good information.
Bye-bye.
And bye, Nikita.
With respect to the, sorry, Glenn.
No problem, go ahead.
Right, with respect to the difference for self-employed persons. So we would have listed the proof of income. However, proof of income for a self-employed person would take the form of audited financial statements. Those should be 3-year historical financial statements, including the income statement, balance sheet, and cash flow statement, along with 3-year financial projections. The individual should also present their certification and registration, along with the application form to show whether it's a partnership or whether it's a sole proprietorship. They also need their bank statements from their business account, and this is to justify the income of the business to ensure that when you take on this financing, that we do not ultimately put you in a financially stressful position.
I hope Leigh-Ann answered that question. Glenn, you have anything else to add there? I can go to the next question.
She covered the criteria for self-employed.
Okay. Let's go along down. Just give me a minute. We have a next question here from Keisha. What if I'm looking to access a mortgage with a family member as opposed to a spouse who is younger than I am? The repayment will be based on the lower age, and what would be the joint mortgage options for the persons that are not married? Glenn, you can take that one.
We answered that previously, we generally consider the older person age and whether and who is the primary person in the mortgage in terms of income, who has the larger income. For I would say to ensure that at the age of retirement that you are not left struggling or financially, how to put it, are in a bad position financially, because as I said, when you retire, you lose a very big percentage of your income. I want to add though to that, where I mentioned co-signing. When you are in the process of thinking about the person you wish to co-sign, you have to give it some very, very, very good thought, because it's very easy to get into a mortgage, and it's very time consuming and lengthy to get out of a mortgage, and costly too as well.
Don't forget the cost. Thank you very much, Glenn. We have Nadia, you have your hand raised. Do you still have a question you want to ask via the mic?
I'm sorry, the name is Nadia, but I would like to ask a question.
No problem. What's your name, sir?
My name is Victor.
Okay. Go ahead, Victor, with your question.
So my question is, let's say that I do have a loan right now, a land mortgage loan, a land loan, sorry, at the moment. Based on the information I would have received from you guys, it sounds like you guys are in a better position to help me with what I want to achieve.
I'm glad to hear that.
Considering I want to then transfer or switch rather from the institution I'm at now to you guys, will there be an additional incurrence of lawyer fees that I would have to now endure to do that switch?
So currently, if I stand correctly, you have an existing mortgage with another financial institution?
Not a mortgage, a land loan.
A land loan.
Yes,
but
please.
You want to construct a house?
Yes, please.
So yes, there will be legal costs incurred with that switching.
Okay, and then as it goes, you have to pay for both myself and my bank.
Yes, the legal costs are for you and the bank.
So this would be, are these lawyer fees both for switching and separate to that of the actual mortgage?
Well, tomorrow you can touch base in the webinar when Susan is giving her presentation, she'll be able to clarify what legal costs would occur in a situation like this, because there are some things that I'm sure may not be charged to you necessarily. You already own the property. It is already registered with you. So we're not now registering the property, but we are obviously taking out or preparing a mortgage document to state that the credit union will have interest in this property. So the specifics of the cost I do not want to get involved in because I am not a lawyer, but Susan will be able to advise you accordingly.
Okay, all right, thank you.
All right, no problem.
Welcome.
All right, let me go to the last person that has their hand raised, then we will take 3 more questions, and any questions that we don't get to tonight, because I'm very mindful of the time, I would definitely commit on adding it to my list to answer tomorrow, okay? I'm seeing here Deb W. Deb, do you still have a question that you need answered?
Yes.
Go ahead with your question.
Okay, so it's related to calculating the net worth of an individual. And usually you use the salary and you send in your documents, etc. But what if I have, say, like a side hustle or some other source of income that I may not have receipts to show for? This is not something that's audited. I have a roommate that's going to contribute. Does that make a difference? You know, I have something that is substantial working for me when it comes to my income. That's not on paper, not like illegal, but you know, like now somebody selling cake, somebody baking, or selling swimsuits, something along the line, you know, that I have going on, doing lessons, babysitting, and that's, you know, every week I have a babysitting or lessons doing, does that matter when it comes to calculating my net worth and what I would then be able to qualify for?
If you cannot prove it, we cannot use it. And when you say net worth, I'm believing you mean your qualifying amount.
Yes, for the qualifying amount.
Right. If you cannot prove it, we cannot necessarily use it in our analysis. What I can tell you though is that it would give some strength to the argument put forward for you, but we would not be able to use it in our numbers for you.
Okay, thank you.
You're welcome.
You're welcome.
So based on that, if it is that you do have a side hustle, what a recommendation I will put forward is start to bank that money. Start to pass the money through the account. Even if you just deposit it today and take it off an hour later, start to use it because you want to generate that trail that you can say, listen, I just met $1,000 additional a month. Because when you put your case to an officer, if they can't see it, they can't use it.
Okay, understood.
Okay.
Also, with reference to all other sources of income, even if you can justify it, based on the time period assigned for mortgages, which are very lengthy financing options, we might not use, as Nikita mentioned earlier, 100% of that income. We might use a reduced amount. So I heard an individual asking about rental income. That would also apply. If it is you have the rental agreement, the tenancy agreement, and you have your receipt books, and you reach out to a certified accountant who's a member of ICAP to prepare audited financial statements, that can be used, as Glenn said, to strengthen the case. But even in that instance, we might not use 100% just because of the longevity of the financing.
Okay, thank you.
You're welcome.
You're welcome. I have a question here. If I'm married, can I apply for a mortgage alone, or would I be forced to do it jointly?
You're free to apply for it alone. But tomorrow when Susan's on, she will clarify the position, because I think that question is being asked for a specific reason, but Susan will be able to clarify on or touch on that tomorrow.
Yes, please. So I would add that to Susan's list along with Steve's question as it relates to the legal fees and the cost for switching and stuff like that. All right, let's go along down the line. With regards to someone applying for a joint mortgage, does both parties need to have the $4,000 on their savings accounts, the qualifying shares?
Is a total of $4,000 on the account. So if you're doing a joint mortgage, one, both individuals need to have individual membership with the Barbados Public Workers Cooperative Credit Union Limited. And then they also need to open a joint account, which needs to carry the $4,000 minimum savings requirement. So both individuals can come up with the $2,000 each to amount to the $4,000 minimum requirement.
Yeah, Leigh-Ann, did you mention that they need to open a joint account, right?
Yes.
Yes.
Okay.
Both need to have individual accounts and then also open a joint account, which the application will be processed under.
All right. I have a question here from Keisha Holder. She's asking, do we stipulate that you use a well-known contractor, or one can use a small firm or multiple laborers? I think Glenn would have answered this question already. We do not stipulate if you have to use a contractor, but if you don't, we still request that you need to get a QS report done so that the house will be accurately priced out. Correct, Glenn and Leigh-Ann?
Correct.
Okay. I have a question here from Sherry-Ann. She's seeking some clarity. She just asking if the contractor's insurance is a one-off when building afterwards, and if it's turned into home insurance after building phase. Is the home insurance thing a monthly payment or a one-off as well? As it relates to the home insurance, first thing first, it is a payment, but it is a policy that you will need to have for the duration of your mortgage. All right. So with that being said, you can decide with your insurance company to have a payment plan, which you can split your monthly installments maybe within 12 or 6 months, or you can pay all one time. But once you have a mortgage in force, you need to have house insurance. All right. We have a question here from Kiana. In the event that someone is laid off, possibly due to COVID, after being granted a mortgage, what implications would incur with regards to that particular borrower?
The person was granted the mortgage. Well, sorry, we can't answer. So I would assume, let's say at one position, because that could go in many different ways. So if the person was granted approval where they have the commitment letter, received the commitment letter, and has yet not started the building process or in the process of obtaining the land, really and truly at that point, we would have to have a discussion with the member to see if they can afford it. Probably discussions of canceling that commitment at this stage, because we wouldn't want to, the credit union is definitely not in the business of looking to take up somebody's home or putting that person under financial strain. So we don't settle with that intention. And if you were to proceed without being able to generate income, that will be the line that will go down. No, if the person, let's say, would have received that mortgage and started to make payments and so on and so forth, our collections department would put a plan in place, or a payment plan, or something to see what commitments they have. In some cases, we use that same qualifying shares to help draw out the time in terms of making payments to the facility. So that is as far as I could speak to that.
All right, thank you very much, Glenn. I'm gonna wrap up in the next 5 minutes, Leigh-Ann and Glenn, so no fear. But I'm just trying to commit to answering majority of the questions tonight. So tomorrow we can start with somewhat of a clean slate. All right. Sheldon Small is asking, what if I only have a credit union account, but he has no bills coming in his name so that he can use as proof of address?
All right, then he would need to collect our Justice of Peace form. He can collect it from his preferred branch. More or less, he would need to take the form to a Justice of Peace who will confirm that he is residing at the address with the individual that the bills come in their name. And he would then present that bill in the individual's name within the last 3 months, along with the Justice of Peace form confirmed by the Justice of Peace as his proof of address.
Okay. I hope that we answered your question, Sheldon. Hi, Kim. Do you still have a question? You have your hand raised, but I know you would have asked one already.
Sorry, that's a mistake.
That is fine. No harm in that. Let's go along down the line. We are almost there. We are almost there. And also, persons, if we, by any chance, omitted your question in error, feel free to send me a direct message or send us an email. We would definitely answer your question directly. We will have a loans officer reach out to you, or we would answer your question tomorrow. All right. How do you obtain a tax clearance certificate? This is Sheldon again. Sheldon, I think you just apply for the tax clearance certificate via BRA, correct?
Correct, yes.
Okay, good. All right, we have one from Cindy. Cindy's asking, she has 2 life insurance policy and a whole life plan and an endowment policy with a payout due before retirement. Can the endowment policy be revised to cover the mortgage? I can't answer that. So hopefully Glenn or Leigh-Ann can. If they can't, we can leave that till tomorrow's session with legal. You guys can let me know.
Yeah, Cindy can use a combination of policies to tailor to her situation. So if there is the whole life covering up to a certain amount, if it does cover the tenor of the mortgage, she can use the whole life on part of maybe one of her terms or the endowment. It all depends on the amount of the mortgage that she's using. But as Susan would be able to answer and clarify that question, if she can go more in depth or explain her exact situation.
Okay, thank you. I have a message here from, just give me a minute. Melissa, I'm seeing here that you're asking for Leigh-Ann or Glenn's contact information. I would send you this information directly via the chat. And as well as you can look out as well in the email when we share the slides and the recording from tonight's webinar. All right, Melissa has a next question here. Would I need to have 2 lawyers or just can I have the attorney with the credit union? I think Glenn or Leigh-Ann, can you answer that for us?
The decision is really up to
the member,
which one you feel more comfortable with. The credit union attorneys can act on your behalf in the matter if you want to, or if you want your own attorney and you trust your own attorney more, you can do that, because they have, the attorneys represent your interests. So the credit union's attorney will represent the credit union's interests and your attorney will represent your interests. So the decision is really up to you.
Okay, thank you very much, Glenn. I have a question. Go ahead.
To add to members, if members want to leave their contact information here for us to reach out to them tomorrow as well, they can do so.
Yes.
Between myself and Leigh-Ann would make time tomorrow to make some calls to reach out to those members.
Just make sure you can send it in the chat to all panelists, and we would collect them together, and then we will share them amongst Leigh-Ann and Glenn. If you have your preference, if you prefer Glenn over Leigh-Ann, you can always state that as well. All right, I have a question here from Shakeem.
The other way around, Nicole.
Not necessarily, Glenn. I said that just because.
Okay.
I have a question here for Shakeem Taylor. Good night. How easy would it be for me to obtain a mortgage for a house and land that I already... Okay. Shakeem wants to purchase house and land from a family member, but it seems like he would have taken out a loan to fix for house repairs on this same property. Can this be done? You need me to repeat the question, Glenn and Leigh-Ann?
Repeat the question for me.
All right, from what I'm gathering here, Shakeem wants to purchase a property from a family member, but previously the property would have asked for repairs, so he went ahead and obtained a loan from us for home repairs on the same property. So he wants to know now if he can apply for a mortgage to us. But before you guys start, he also wants to know what is the requirements for a business account. Shakeem, we don't do business accounts at the credit union. All right, so our lending is majority just for individual purposes. Leigh-Ann or Glenn, you guys can answer the other question.
Okay, and also what you can do though is add your business name to your account, so that if you have any checks that are paid to the business name, you can still transact that business. Or if you want to make any checks payable out to the business name or out to your name by order of the business, then you can also do that. But you will need to bring your business registration document and the application form that a company say to have the business name added to the account. With respect to the financing for the property, it would be similar to a house and land purchase. Whether or not you are able to consolidate the loan that you would have taken out in order to do the home improvements on that property would depend highly on the financing and the values and the equity, more or less, in that property at this time. But you would bring in your job letter, your last 2 months of pay slips, your 2 forms of ID, your proof of address if you're self-employed, your financial statements that are audited and prepared by a certified accountant as a member of ICAB, along with the letter of sale from your relative indicating the agreed selling price and the recent valuation within a year accompanied with the surveyor's plot.
Yes, please. I'm going to take 2 more questions. Michelle is asking, is the interest rate of 4.75 for new mortgages or existing mortgages or both?
The option is available to...
The option is... The option... You want finish, Leigh-Ann?
Go ahead.
So
I'm doing a little intro.
Okay. Right. So the option is available for it to be on existing mortgages. The member would have to just apply what Leigh-Ann would have mentioned, our new product deed of variation is done, and we would automatically reduce that rate. We would have changed our rates or reduced our rates in the beginning of last year or late 2019. And the existing rates on some people's mortgages may have remained the same, and we were giving a new rate to new mortgages. But if a member wants to reduce their rate, they can just apply for the deed of variation, and we would do that for them.
So if you're interested in the deed of variation option, what you can do is present or provide us with a letter indicating that you would like your interest rate to be reduced to the new interest rate of 4.75%. Bring the land tax, the last land tax bill, the land tax clearing certificate, and the land tax receipt for the last period. Show evidence that your property insurance and your life insurance are still up to date, unless of course you're with our blanket policy, whereby you will have that information readily accessible.
All right, I'm going to ask 2 more questions and then I'm going to wrap it up because I know next tomorrow we're going to have a very long day. I know Glenn is smiling because he said Nicole said she's going to ask 2 more questions 20 minutes ago, but I'm trying not to disappoint. All right, sure. Now Celie has a question here. She's asking, is the maturity date of a mortgage capped on reaching the age 65 or to age 67? I think it's to retirement age, correct?
Yes, it's the retirement age.
Okay. All right. All right, everyone. I am going to wrap it up here. I want to say thank you very much for everyone that would have basically been here from 6 o'clock when we had issues till 9:12. We had approximately over 300 persons on the webinar today. I'm looking forward to having you guys tomorrow. If you want to reach out to us before, I am going to send the slides or maybe just send a general information if I don't get the slides from Nikita before, with the contact information that you can really reach either Leigh-Ann or Glenn, okay? The contact information will consist of their desk number and their email address, and I will just give you my contact information for safekeeping just in case. All right. Thanks again for having us and for being here. We welcome you guys tomorrow. Have a good night. Okay, Leigh-Ann and Glenn, do you have anything else you want to add?
Well, thanks for having us, and we look forward to seeing you tomorrow.
For the full attention. So we look forward to seeing everybody tomorrow and looking forward to hearing from some of the persons who have contacted us during the question segment.
All right, I am going to end the call here. Maybe in the next 2 minutes. I'm just going to give persons enough time to send their contact information directly to all panelists, or you can send it to Leigh-Ann or Glenn directly. All right, have a good night, and I'm really, really looking forward to having you all, you guys here, plus more tomorrow.
Thank you.
Thank you.